for the backdrop that makes me look younger and thinner?
Well, that's the one that I've been working on. I've asked our good friend Vincent, and he tells me that if I get this perfect green screen, it could be the ticket.
Yeah, you'd think with all those special effects and everything that they're baking into these things today, we would all be much better looking.
Yes. All right. So, okay, everyone. Well, good afternoon. Thank you so much. Welcome to another great KoreSummit series 2021. Today is a very special KoreSummit for us here at KoreConnex. There is a market for your private securities. This is a title that we've been waiting for to say it out loud for a very long time, and today marks that day. We're really excited because this particular KoreSummit is brought together with a collaboration of partners that we came together to bring it a fluid end-to-end solution, both for the primary and secondary. Crowd check compliance goes without saying. Without their trade check report, this would not be available. And of course, the Rialto markets, secondary market ATS. Our media partner, FinTech TV, thank you so much for everyone on your team, spreading the word, letting everyone know what we're doing. And as I said, it is a monumental day. We have great core partners who are going to provide you much needed information to demystify what secondary market trading is. Believe me, I've been there. I was there 3-4 years ago talking about it, promoting it because of blockchain. And now you're wondering what happened. Well, we learned a lot along the way. And more importantly, today, you're going to get the goods. You're going to find out what it's really all about. And for me, it's so important because it all started with our keynote today. It started with David Weil. It began over 11 years ago, if you can believe it, probably even longer for him. But more important, that journey just keeps opening more doors for all of us. And those particular doors we're opening right now are important to make sure that we have a viable market for everyone involved, the investors, the companies, to be able to participate. And today's chapter is no different than any other chapter we've had before. And this particular chapter, as we call it, is going to be amazing because it's going to bring wonderful awareness to these great private companies, but it's going to create a brand new industry of providers that are going to need to support this new environment. So that goes without saying. The day is going to get exciting. It's going to start off, as you saw, panels talking about the regulation. You're going to hear it from end to end. What do you need? What is everything? You're going to hear about research. Why is that important? Price discovery. You're going to hear from the perspective of a CEO. And then, of course, you got to stay to the end because at 4:15 this afternoon, you're going to hear and see the demonstration from primary to secondary market for someone to trade as low as $10. That's the real magic here. So, as I said it before, he's been for us at KoreConnex, he is the reason we are here, is the reason why we exist as a company. I'm thankful every single day that I met this individual, that I had the opportunity to speak to him years back. And I've been inspired ever since to pursue this journey, along with all of you that are here today. And it is important to understand the hard work that was done then, but this new chapter is all related to none other than Mr. David Weil, the father of the jobs, the former vice chairman of NASDAQ, and today the chairman and CEO of Weil & Co., one of the fastest growing FINRA broker dealers in the United States. David.
Hi, Oscar. One thing I was going to point out to the audience, because I was listening intently, and by the way, congratulations to you and to Sherry Noonan, who runs Rialto. I mean, I think that this is part of the evolution of these markets. It takes a long time because markets God knows how much work you and your team have put into this, and Sherry and her team over the years just to get it right. There's a lot of experimentation. Nobody gives you, the playbook on how to happen. You have to use your wits and your energies, and it takes, people don't underestimate the long road. But I will tell you that it gets better and better as you get larger. It gets easier and easier. You have more resources, and so we're on the cusp, I think, of of starting to see, private markets broadly break out very significantly because of this very impressive change. You mentioned that you're going to be able to do trades down to $10. For the audience, I wanted everybody to understand that that's not a share price increment of $10. That's an investment size of $10, which is really small. So you'll be able to do micro investment transactions here. Look, I think that, to manage everybody's expectations, what you have is technology and systems that will allow people to transact in a closed loop system. What Oscar hopefully will point out to people is that we'll start setting up nodes. He will start setting up nodes for other firms that want to get into private markets. My understanding is that the ATS on which the trading will go on ultimately can be private labeled as well for securities firms. And so what you indeed really have with KoreConnex is a toolkit to be able to, for those of you that are in the investment banking business, to do a better job of serving your corporate issuer clients and your investor clients in those corporate issuances. Is that fair, Oscar?
100%. You nailed it. It's really the big change that I see is the dollar amount is significant, because whenever you hear about secondary market trading, you only hear about certain types of investors. I call it the 1%, but I'm not being facetious. I'm just pointing out it's a very small selected group, but this changes all that. This has been a journey for me for a long time. As you know, we advocated for it when blockchain was introduced. We thought that blockchain was the fundamental game changer. The problem was that a lot of people really didn't understand what secondary market was. And you're right, we're still uncovering it. We're still understanding how the SEC views it, what regulations are needed. But now I'm thrilled, not because there's going to be massive volume overnight. This is just like when, remember the jobs that got introduced, it took 3 years for the first Reg CF to go live. And when it did, it had a spark. It was great, but it wasn't like billions of dollars came in right away. But look what we are today. A few years later, we raised over $230 million plus on Reg CF and billions of dollars in Reg A. So I think it's a great beginning, new chapter.
Well, and look, I mean, it's if you were dealing with a micro cap, security, and I'll define it as anything that has under $500 million in float value. You have challenges, right? Which is to say that you don't have a network effect, which is thousands of investors looking at something at any point in time, standing in the ready to buy or sell that public security in public markets. So you have challenges in traditional public markets for a $50 million float company. And so you're going to find over time that those that are successful in leveraging this are going to choose the asset class that's easier to value initially in the early throws, security structures that pay distributions, because again, then they have more bond-like elements, they trade closer to their share price, or they're going to figure out how to create research and sales effort to support aftermarket liquidity so that it becomes a little bit more high touch. And all of that stuff will need to kind of develop over time in the experimental shop, because obviously to the extent that people can purchase securities that trade well and trade up, it only primes the pump of demand and interest. And I know everybody at both Rialto and KoreConnex going to be hard at work at figuring all of that out. I mean, just for those of you that have followed the evolution of the Jobs Act. I mean, I remember being at the SEC a number of times, and I've heard this from different heads of corporation finance, which is the group that reviews everybody's IPO filings and the like. And they would always say how amazed they were and how slow the world is to kind of adopt regulatory changes, right? And And the reason they're slow is because you have a plaintiff's bar and people are always worried that they don't get it wrong because they don't want to get sued. And so it tends to be a business that sort of is very slow in developing the implementation and the execution of new rules at the front end. And then all of a sudden, watch out, it starts to take on and grow. And I think that we're starting to kind of get ourselves into this sort of launch phase of the industry now, because there's been enough kind of heavy lifting and innovating done with different structures and systems like CoreConnects, that now it's starting to begin to show that it's reaching a critical mass phase. So I think the next 10 years are going to be very, very interesting to watch.
No, I agree. Look, as I reflect back to every moment, every change that has happened in a regulation, it takes us one step further and closer to making this a viable way for investors to participate. And in order to have all investors, I think that's one of the fundamentals in this. It's not to exclude those who have been participating previously. It's to still continue to allow the existing investor base that's out there, meaning institutional, private equity, venture capital. Jobs Act, one thing that I always remind people, Jobs Act didn't say democratization and exclude them. It was certainly include everyone, give everyone a chance. And I think secondary market combined with those two groups could be very interesting. But you're right, all of this is going to take time. Players like Rialto Markets opening up the first chapter, there's probably an array of companies just wondering how are they going to be able to support a Rialto Markets to be able to do this. So that's one. And then you have this compliance element to it that people need to be aware of, which is this is not like public companies. There's a little bit more regulatory oversight. It's not, one of your colleagues, Elliot, always reminds me, Oscar, the word is not liquidity, it's monetization, because liquidity would have a different implication, and particularly in the early days. But all of that is going to require outside external support. How are people going to know about it? How's the investor going to have any greater insight into the company other than what Rialto's offering? So for all of you listening today, there is a new chapter, a new ecosystem that needs to be developed to support the Rialto markets that are coming out in the market today. And I believe they're going to come out in not just in the US, Canada, UK, Australia. You're going to see that, because whenever the US does something, I'll tell you this, every other country starts getting on it very, very quickly. And we saw that with secondary market trading for institution. We're going to see it again. And that's a positive indicator, because then we move ourselves to the next stage of this ecosystem. So it's, for me personally, as an entrepreneur, it's a wonderful journey to be able to explain to an investor the journey of their investment and how they could, if they needed to, monetize without creating a barrier for them. That's the important part that I believe is critical here.
Right. I think one of the things that I always find interesting about what Oscar's done is, this is a closed loop blockchain based system, and you're not actually trading a token, so you don't need a cyber wallet, right? So you don't have to worry when you open up an account and execute ultimately a trade. You don't have to worry about doing something stupid like losing your crypto, right? That custody issue is essentially solved by the nature of the system that they designed. And when you look at these systems, right, historically there've been 3 layers, right? And you don't need all 3 layers, but there've been 3 layers. You got the block, which is the general ledger, the distributed ledger system that allows you to keep track of and create great transparency around the transactional businesses like this. And then the second layer is the smart contracts that help you automate compliance, right? Which drives down the price point at which you can actually start to, and make it more feasible to trade private market securities. And then the third layer, which we don't do here, which is the token, The way that the system has been designed, but you can open up an electronic account, you can access your information online, you can trade from the comfort of your own home, but you don't have to worry about having another cyber wallet and losing that cyber wallet or doing something stupid so that you can't you end up losing the value that you've worked so hard to create. Is that fair?
Oh, you remember back in 2016 when we kept telling people I'm sure you can look back. When was the last time somebody invested in a company and then took out their wallet and said, give me the share certificate to put in there? And then to charge me to move it around. So yes, the wallet is gone here. The wallet is it was a security risk from our chain, but more importantly, we wanted to treat the investor what they're used to. What they're used to doing is what they do, and they want to see information in the way they're used to seeing it. They don't want to see 64 characters. What does that mean? Yes, that's all the information. And the other thing is, we wanted to make sure that there was no additional cost to them. There's no gas fees, as it's called, for them to be able to move their security from themselves to their family members on a transfer or to be able to do a trade. So we needed to remove all of those additional costs out of and that's where this infrastructure is. It is decentralized. It's a permission-based environment, and it has all the attributes of blockchain immutable, right? Once David Wheel buys those securities of 1,000 shares in that company, they're yours. You'll never be erased from the record. Once you've been ID'd an AML by a registered FINRA broker-dealer, now there's a core chain ID on your identity. Those are two powerful, immutable information that makes it fluidly to be able to move your data from the time you made the investment to the time that you sit on the company's cap table where the transfer agent, SEC transfer agent is there, to then allow you to do a trade or a transfer on the Rialto secondary market. So at the beginning, nobody thought that was the way to approach it. But given that people don't want to lose money, so one, there's always a risk of investing in private company. That's one risk. The second risk, as you alluded to, people would hear, what if I lose my key? I lose out my $10,000 investment. Yeah, that's what would happen. So in this scenario, none of that is going to happen to any of the investors. None of that is going to be any of their concerns. So it's pretty exciting today to be able to hear that. And David, I'm always thankful because for everyone here, all of you listening, this is the reason it got started. And you should all know he's already working on Jobs Act version 4.0, the JUMP Coalition. That's right. We can't stop this journey. The journey continues. We need to continuously keep pushing the envelope to make it more fluid, to make it easier to democratize capital for everyone, minorities, everyone involved in the market. And once again, he is added quietly in the background with his colleagues doing it for us to make sure that we can fulfill that goal. So once again, David, thank you again for sharing your moments with us today, this afternoon.
Yeah, I was going to mention one thing. You were talking about making it easy and taking the challenge away. There's actually a book, and it's a very famous book that kind of was circulated in Silicon Valley called "Crossing the Chasm" by Jeffrey Moore, right? And one of the things that you hit on that is so smart is actually that cyber wallet is that part of the technology for trading tokens that actually stymies people, right? There are a lot of people that just want, including institutions, that don't want to own something where there's any chance at all that they could do something stupid and lose their money, right? So it's been an inhibitor. And the beauty of the system that you're making use of the new technology and automating a lot of the compliance that that creates all this constipation in these private markets. But you're doing it in a way that emulates the way people are used to transacting, right? Which is you got an account and you can do it through your account interface. And so because it's familiar, you really don't need to understand the how it works, right? You can just do it. right? And I think that that is what's going to drive this ultimately, so that it really crosses the chasm of adoption and gets into the top end of the population bell curve over the long run. And I think it's absolutely a brilliant insight on the part of you and your team, Oscar.
I appreciate that, David. Thank you, as always. And looking forward to continuing that dialogue. And we now move into our first amazing panel. David, this is, I mean, I'm sure you know all of them. It's going to be led by the co-founder and CEO of Rialto Markets, Sherry Noonan, and she is going to be here with her colleagues to bring the first panel discussion this afternoon, which is going to be on the entire demystifying the private markets, the secondary market trading. What does it need? What are the laws? Sherry, the floor is yours.
Thank you so much, Oscar. I'm so excited to moderate this first panel. The first panel is, what is secondary market trading? How does it work for private companies? And first of all, I'm so excited to moderate this first panel because all of the panelists are incredibly knowledgeable, but they're also a lot of fun. Everyone has a very, very deep background in this particular topic. But what I love is that each of you bring deep expertise in different lenses of this topic. So if we can first start off with introductions, I'm going to start with Sarah because you're in the top left screen for me. So if you can start, Sarah Hanks.
Hi, Sarah Hanks, CEO of CrowdCheck and managing partner of CrowdCheck Law, and together the two provide a wide range of legal compliance, diligence, and filing services for all of the online offerings that we're talking about.
Excellent, thanks, Sarah. Linda Lerner.
Linda Lerner, I'm a partner at Halloran Farkas and Killa, a law firm that spends a lot of its time on emerging entrepreneurs and venture capital. I, in particular, have concentrated on electronic trading markets and related issues and digital asset securities for, well, not so long on digital asset securities, which haven't been around for that long, but I began my work with electronic trading markets in 1995. So I've been kicking around this area for a long time and got approval for ECN, which was the precursor of ATS's number 4.
That's right. That's right. Anne-Marie Tierney.
Hi, I'm Anne-Marie Tierney. I am the founder and principal of Liquid Advisors. We're a strategic consulting firm that provides strategic advice, legal and regulatory advice for a wide range of participants in the traditional and digital capital market space. I got involved in the private company market space in 2010 when I was working for a company called Second Market, which was the first BDATS to trade private company stock. And we worked on a lot of initiatives that led to legislative rules and kind of frameworks that the whole market's applying today. So I'm really happy to be here. And again, we're all actually not just fun, but we're actually all friends. So it's great to be at a panel with friends.
That's right. That's right. And Anne-Marie, I just love this because you have a really long history in private markets, really trying to solve secondary markets in private company space. Can you give an overview of what secondary trading for private markets, what they provide, and a little bit of the history and background?
Sure. So if I start with a little bit of background that kind of feeds into the structure. So in 2010, I joined a company called Second Market, which was one of the original ATS BDs in the private company space. And we were doing auctions in really sought after pre-IPO companies like Facebook and Zynga and Twitter. And we spent a lot of time with the SEC and other regulators, making sure they understood that we were following all the no action letters that were out there, which at that point in time were really IPO net. And there were statutory exemptions for resales of private company stock, but there wasn't a real federal exemption for sales other than for shares that have been held for a year. So we started talking to people on the Hill about the fact that companies like Facebook were being forced to go public because at that time, the trigger for registration was 500 shareholders of record. So I know David and Oscar spoke on the last panel about parts of the Jobs Act, but the part that we worked on was the bill that changed the threshold from 500 to 2,000 holders of record and exempted out employees, which we thought was a big gift because the vast majority of shareholders in these private companies were employees. So what that did was it really changed the dynamic so that private companies could stay private, as we now see, much, much longer. At the same time, slow, Sarah and Linda will tell you, very slow to get Reg A Plus finally actually enacted by the SEC and Reg CF. So all of these new capital formation tools were finally available in the private company space that really let companies raise like significant amounts of money and stay private as long as they wanted. So what we saw was kind of a move from one-off unrestricted owners of shares selling to accredited investors to a different kind of market dynamic. And what we found was that companies really cared about liquidity, both on the pro and con side, right? They didn't want unfettered liquidity. A lot of them had pretty significant transfer restrictions around sales of their shares. So we ended up moving into a model where companies were actively involved in providing liquidity. And that could be from sponsoring private tender offers, which a lot of companies pursue, or getting involved with broker-dealer ATS platforms who are going to allow them to create some kind of control around that process. A second bill that we worked on in 2014, 2015, when I moved from second market to what's NASDAQ private market now, was a new exemption at the federal level called Section 407 that basically took the states, and Sarah will spend some time talking about the jolly good times that we all have at the state level solving for secondary liquidity. But Section 407 finally preempted the states for resale of private company stock. But that included obligations like no general solicitation, and that there had to be kind of fairly substantive disclosure provided to the buyers and sellers, which a lot of private companies weren't willing to do. So although we have a preemption from state law, it's not particularly helpful unless the company, again, is willing to provide liquidity. So I morphed from kind of the traditional book entry private company space into the digital in 2018 when I went to work for BD ATS called Templum, which was one of the original BD ATSs to be able to trade unregistered securities, including a digital format. And where we weren't able to crack the nut, I think, Sherry, you guys have at Rialto so that you could do it into the traditional and the digital space in a really meaningful way, including for companies that are doing Reg A Plus and crowdfunding deals, where I think what liquidity provides is the benefit of not being trapped in an investment until a company goes public, the ability for people to get upside for the commitments they've made to private companies, the ability for buyers to access companies that they might not have been able to invest in the private placement. So there's so many upsides of liquidity for private companies. I think we saw specifically with the lesser known pre-IPO companies, the ability to offer secondary liquidity made it significantly easier to raise the primary offering round. So there's so many benefits of secondary liquidity for issuers, for original investors, for employees, and for buyers in the market. I'm so excited to see that the market's continuing to develop.
That's great. That's great. Linda, so as you mentioned in your introduction, and actually I worked at an ECN, I worked at Instanet, so we sort of had parallel lives back in the 90s. You've seen the evolution of secondary markets over time. What's unique about secondary markets in private securities? And can you go into a little bit about the difference between an exchange versus an ATS? What are the differences in terms of considerations from that market structure perspective? Oh, you're on mute.
Exchange Act Rule 3B16, which was passed in connection with other rules, contains the definition of an exchange in a much more clear fashion than it had previously been defined. And it's a two-part test. An exchange, whether it's a registered exchange or an alternative trading system, which has its
Oh, we lost Linda.
What?
Oh, we lost you for a second.
Do you have me now?
We have you.
I'm sorry. So an exchange, whether it's an ATS or a registered exchange, brings together, I'm being notified my internet connection is unstable. I'm in Wyoming. I apologize.
That's okay.
Brings together multiple buyers and sellers orders. So if you have, for instance, a broker on one side interacting with a whole bunch of people on the other side, that's not an exchange because you have only, on one side, you have only one party. So you have to have multiple buyers and multiple sellers. And the other part of the test is that you have to have non-discretionary methods for matching orders. So if you're just sitting around and looking at a pile of orders and figuring out what you want to match with what, that's not an exchange. If you have some algorithm or system that's non-discretionary, that is an exchange. So what's the difference between an exchange and an alternative trading system? An exchange has to register and is regulated by and overseen by the SEC. And it can regulate all of the conduct of its members, all of the conduct, wherever it takes place and whatever that conduct is. An alternative trading system has to be operated by a registered broker-dealer. But the alternative trading system itself, interestingly, is not registered. You fill out a form and send it into the SEC, and the SEC has 20 days to look at it. The rule kind of makes it look like, well, okay, and then you can go ahead and operate, but you really can't because the SEC might have comments. And every time you have to change something, if it's substantial, you have to wait another 20 days. So not so fast, exactly. And an alternative trading system, although it's not that slow, the unit of the SEC that looks at these Form ATS submissions is housed within the Division of Trading and Markets. And there's a special little group that just does approvals and oversight of what's going on with ATSs. On an ATS, you can trade registered and unregistered securities. An ATS can charge commissions. Like I said, it gets orders from multiple buyers and sellers and matches them. It can match them either continuously or in crossing sessions, or it can do both. It can have, multiple systems operating at the same time, as long as you've submitted that on your Form ATS to the SEC. Now it's operated by a registered broker-dealer, which means that FINRA gets its hands on it too. So when you send your Form ATS to the SEC, the broker-dealer has to also send a copy to FINRA, and FINRA will be more hands-on on a day-to-day. Don't think that
Oh, Linda, we're losing you again. Linda, I think we've lost you. Linda, I think we've lost you to the ether of Wyoming. So, Linda, I think we've lost you to the ether of Wyoming. So I'm sorry. I think we've lost you. So
And you might also just want to try to turn off your video because that often makes the signal stronger, although then we get to see your face. But if you keep mixing
okay,
up.
can you hear me now?
we can hear you. So maybe if you want to just, yeah.
I'll do that. You all know what I look like.
You.
All right, so I'm just going to go back a drop. ATSs get orders from multiple buyers and sellers, and they match them either on a continuous basis or on a cross basis, or they can have multiple systems going on at the same time as long as they're approved. It can be matched at the exact price specified by the buyer and the seller, or you can have a midpoint cross or any other system you can think up. Generally, securities are delivered against receipt of payment, and funds are delivered against receipt of securities. Sorry, I'm trying not to miss anything. So let's talk about how capital gets attracted. it gets attracted through friends and family, venture capitalists, through a series of fundraising rounds, through a raise on crowdfunding portal, under Reg CF, under the Jobs Act, or via a Reg A raise. And there are differences. So a Reg A securities, when you do that raise, those securities are immediately freely tradable. Other securities are not. A Reg CF raise, you have to, depending on whether the investor is accredited or not, you either have to wait 90 days or a year. And under Reg D, you have to wait a year or 6 months, or it depends what your lawyer is telling you and your particular situation. But there are other restrictions on transfers. A lot of private securities that wander onto ATSs have rights of first refusal attached to them. A lot of times they're owned by employees. And so you have to be careful to free up the shares that you have to go back to the issuer's counsel. And issuer's counsel, especially in Silicon Valley, is used to doing this and can get the shares freed up usually in 4 to 6 weeks, sometimes even faster. Sometimes the issuers want to waive the restrictions on transfer, and sometimes they don't. And it's not just rights of first refusal. Sometimes there are more restrictive restrictions. So the transfer agent and counsel for the issuer have to be.
Yep, Linda, I want to make a note for everyone that this is something to, for later in the day when we sort of square the circle around transfer agents and making sure that on the alternative trading system, making sure that the shares are freely tradable and understanding any restrictions associating with them, and how the connectivity between the alternative trading system and the transfer agent is really critical, and having connectivity between those two entities. So I'm just going to, sort of note to self for later in the day.
Right, and I'll get off that, but there are other problems. If they're digital asset securities, then there are even more restrictions on the broker-dealer operating the ATS, which is not permitted to have any kind of custody or control over the securities. And doing that dance around not having custody or control over those digital asset securities, which the SEC is very fearful of, is it's an involved dance with a lot of steps. And you should, if you want to run an ATS, or you are an ATS, be in close touch with your counsel at all points, so that they can clear with the regulators what the operation that you propose.
Absolutely. So just to kind of demystify that for everyone listening, Rialto, we did get that clearance a year ago. It took us about 2 years of working with the SEC and FINRA, and so it was quite involved. But it's just the SEC's concerned, and it's early days, and so they're very moderated in how they approach new technology, and so we worked with them for quite some time. So that's what Linda's referring to.
Yes.
I would like to add the point that what I think is happening with the SEC and with FINRA is they're kind of pulling in some of the concerns they have around pure crypto assets, where you can lose your password, you can get hacked, you can lose access to your wallet. And so they're bringing some of these concerns into the broker-dealer space, which I think for most of us who operate in the space is a bit confusing, because these are just intentionally blockchain represented securities. They're obviously on the issuer's books and records, and most of the technology that exists right now for creating digital securities, it's just a different sort of a ledger. And so I think, many of us in the industry who looked at that special purpose broker-dealer statement the SEC put out last year, pushed back and said, this looks like regulation by technology. And it's just a very simple structure, right? There's nothing different other than you're using a different kind of technology. So we're hopeful that they'll start acknowledging that there's no real risk around digital asset securities compared to traditional book entry securities, at least in my opinion, in my experience.
Absolutely.
I think that's great, and I would agree with you, but I think at this
Oh, I think we've lost Linda even more. So Sarah, shifting gears a bit, in terms of, the considerations that issuers should really be looking at, and I know we sort of went down digital securities and some really technical items. Let's talk about a little bit more, what are some of the reporting issues that issuers should be looking at, some of the legal and regulatory considerations that issuers should be looking at when they're looking at, coming on to an alternative trading system?
Sure. Yeah, I think I divide things to look at into three main blocks. And one of the first ones is one of the things that Linda just was talking about, because when we've got private securities, right, that they could have, private companies could have issued securities in a number of different ways. Could have been Reg D, restricted securities, Reg A, exempt public offerings, not restricted, Reg CF, exempt public offerings, and they're sort of restricted, but they're not, quote, restricted securities in the context of Rule 144. And so you could have a whole bunch of different restrictions. And building on that, a right of first refusal, right of first offer, restrictions on transfer, all very, very common in Reg D offerings. In Reg A offerings, the SEC is like, nah, we do not like that. And we have some companies who really want to file with Reg A with those things, and we end up with long discussions with the staff about whether that's going to be permitted. So job one in determining whether you are going to have your securities traded is establish which securities are going to trade and what offerings they were offered under and what rights or restrictions they are operating under, and make sure you either pull those out, change them. And first job, of course, is always talk to your transfer agent, because as we're going to get into in a minute, it's incredibly important that the transfer agent have recorded what exemption these things were offered under, as well as when these things were offered.
Mm-hmm.
And then I'm just going to add, that's also critically important for companies who often don't have transfer agents until a little bit later in their life cycle.
Yeah.
So in our experience in the private company space, many of them did not have a registered transfer agent, but they had either a law firm or someone else managing their cap table whose job it was to track that. So just in case they're an issuer in our audience who doesn't have a transfer agent, I just want to make sure they understand we know they're doing it right in whatever way they're doing it. But
providing that those were Reg D securities. If you were doing Reg A or Reg CF, as we're going to get into, you really should have a registered transfer agent, because this is thing two that I think issuers need to do is count your shareholders, because I want you to think about Section 12G, which says, and to build on what Anne-Marie was talking about earlier, some companies were forced into becoming registered companies before they were actually ready, and certainly before they wanted to, because of Section 12G. And 12G says if you have assets of 10 million and a class of equity securities held by 2,000 people, no more than 500 of whom can be non-accredited, which you have to keep track of if you were going to rely on that bit, you have to become a fully registered company, fully reporting under the 34 Act. Except there are two exceptions, one for CF, one for A. And CF says that the conditional exemption for Reg CF says you do not include securities that were offered under Reg CF. And this is why, again, you do need to have a transfer agent who's keeping track of this, because it's not the people you're counting, it's the securities. So you can take securities held by anybody that were originally issued under Reg CF and not include them, providing you are up to date with your Reg CF annual filings. And by the way, Reg CF companies out there, about a third of you are absolutely in violation of those. So you might want to think about that. that you have a registered transfer agent, and you don't have assets more than 25 million. Now, we're running into a very interesting time right now because some of the companies that we did Reg CF offerings for back in the day in 2016, some of them, thank goodness, are thriving and they have assets, and we are running up against that 25 million asset. Once you fall out of any one of those three conditions, you have lost the conditional exemption. Reg A, confusingly, there is a conditional exemption. It is slightly different. You have to be up to date with your reports and be current with your reports. That means if you are late in filing your 1K, looking at about 10% of all of you Reg A companies, you can't be having your securities traded. You also need a transfer agent, and the monetary limit here is a public float of $75 million or revenues of 50 million. And we're seeing some of the Reg A companies come bumping up against those. So your first job in item number 2 is count. Check that you haven't already fallen out of these exemptions, and thus and make sure that trading will not make it worse. Also, again, make sure that your reports are up to date, because both reporting regimes, whether it's Reg A or Reg CF, are somewhat lenient in not having to, if you miss the filing date, okay, you can get back into exemption pretty easily, provided that you didn't already trigger 12G. So do some counting. And then job 3 is, if for an issuer who wants to have secondary trading, is to comply with blue sky laws. Just to emphasize the thing that I always used to say to my first year associates in law firms, every trade of securities is either registered, exempt from registration, or illegal. Those are the only options. So secondary trades at the federal level, even though you don't realize it, when you're buying, you're buying GameStop or whatever and selling GameStop, you're actually relying on Section 4A1 of the Securities Act. If you're not an affiliate, you will nearly always have that resale exemption. The states, however, are different, and as Anne-Marie was a pioneer in this area of pulling together these wonderful maps of showing in several different colors of what the exemptions were. There are different exemptions at the state level. I won't get into a huge amount of detail because basically we've fixed this for you. But some states will let you trade if the company is a Reg A issuer with its filings up to date. Some states say if you are in a securities manual, which is basically emergence at the moment, but who knows, might expand, then there is an exemption for a trade. There are exemptions for isolated trading for companies that meet 15C to 11. And then there's California, which is its own brand of special, where you have to make an actual filing. And we've talked to some of the regulators there, and they're like, yeah, maybe we should think about getting in line with the other states. Currently, not. And so any issuer who wants to be able to trade must make sure that its securities meet the requirements of the specific state. As I said, no crowd check. We've got this thing called trade check, which will get you there. Unfortunately, it's not free. There are filing fees as well. And it has to be updated annually. It's a shame the SEC had asked in concept releases a few times, what do you think about preempting state secondary trading laws? And most of the community said yes. And the SEC is like, yeah, maybe not. And when we talk to staffers in recent conferences, they've been emphasizing the important role that the states play in the regulatory regime. So at least for the next 4 years, that's not happening. So you've got to jump through all of these hoops. There you go. Back to you, Sherry.
Excellent. Thank you so much.
Sherry, can
yep.
you hear me now?
I can hear you. I'm glad that we got you back. So maybe we can go back to you for a second and talk a little bit about, any differences in, if an issuer can, request a trading halt if they're in the midst of a primary raise.
Yeah, I'd like to talk about that because
Perfect.
I think it's dangerous for an issuer to halt securities. You saw what happened with GameStop, right? Where Robinhood stopped the trading. So you can't just stop trading willy-nilly, even though it would seem like a good idea, maybe for the issuer to get its offering done if secondary trading could stop. The only legitimate reason for stopping trading by an ATS would be if there were some kind of market manipulation going on. And then the ATS is free to stop the trading, on a dime. But other than that, I think I can't think of a reason why you should be able to do this under the laws as it currently stands. The other thing I'd like to talk about a little bit is politics, because we've all been touching on that a bit. I think it's important to understand that there is a tension, which I think is unfair, between investor protection and capital formation. And you see the two Democratic commissioners, I'm not talking about Gensler now, the other two, very much planting their flag in the camp of investor protection and not really liking, and they've said this publicly, so this is not my, imagining, not really liking private securities and private securities trading. They think it's dangerous and it's somehow unfair, and all of these companies that are private should go register. Thank you very much. On the other hand, that's the costs attendant to that are not realistic for a lot of issuers. So that presents a real problem for the issuers. Where Gary Gensler will come out on this, I don't really know, but I think they're struggling, and I think they're butting heads. I mean, you've got Hester Peirce on the one side saying, let it all roll out and let's see how it goes. And then you've got some other commissioners, not so fast. Thank you very much. And then, Sarah was talking about the states. Well, the states yelled a lot recently about feeling ignored. I mean, they really raised their voices. They've been upset about it for years, but they've made a big push. So this year, the SEC seems to be paying more attention or trying to be more respectful of the state's point of view and bring the states to the table, although the states are still complaining, I think, loudly that they want to be at the table at the get-go. And I think that the SEC is not getting them there at the get-go. So this is going to keep happening.
Yep. Anne-Marie, I think it would be interesting for the issuers to hear different types of business model considerations. As you know, we've got a lot of companies on the call right now, and they're really interested in hearing about different types of ATS modes of interaction and what that means for them as issuers and their investors. So for example, we've got broker to broker alternative trading systems, we've got other types, we've got auction versus real time. What does that actually mean? Can you maybe walk us through all of those different business models and then what those actually mean for issuers and kind of demystify that?
Well, I'll do my best, and obviously, Cherry, you're more of an expert on some of these models than I am. I think one thing that's really important to know off the top is that unlike in the public markets, where there's a rule called Reg NMS that basically says all orders have to be routed to the best price. So no matter whether you place your orders for a New York Stock Exchange listed stock, that might actually get filled on a different stock exchange or different trading model. That doesn't exist in the private company space. So the broker dealers in the private company space are not interconnected as a general matter. So where you see platforms operating, sort of, they make markets in particular stocks based on the sellers that come to them wanting to sell, based on, you know, the structure of that ATS, the fee structure of that ATS, the willingness of the issuer to work with that ATS. And I think there's a lot of variations there. So in the traditionally represented private company space, I referenced NASDAQ private market earlier. They do private tender offers. So they work with kind of large pre-IPO companies that have been existing for 12 to 14 years, maybe as long as 12 to 14 years. They are planning on going public at some point in time. Examples of that were Facebook, Twitter, Zynga, Palantir, Airbnb, Uber. They all ran private liquidity programs through NASDAQ private market. So the company actually hired NASDAQ private market to organize the tender offer and run it electronically. The company set the price. The company said who can sell and how much they could sell. And then the company specifically either approved the buyers, who are almost always institutional, or limited buyers to existing institutional shareholders. That's one way that liquidity happens in the private company space. There are other markets in the traditional space like Forge and EquityZen, which are only trading in either book entry or certificated shares. Those are, they have geared towards creation of special purpose vehicles. So the actual broker dealer creates special purpose vehicles for people to invest through in shares when they become available. And Linda talked earlier about the fact that transactions in private company stock are often very complicated. You have very, you often have very significant restriction of transferability. You have a right of first refusal process, which means the company has to be given notice about a proposed share transfer, and then has 30 days to decide if they're going to buy those shares back themselves, or maybe they have a third party they have a legal right to offer those shares to. There's a lot of documentation requirements, purchase and sale agreements. There might be legal opinions required on the ability of the seller to actually legally sell the shares. Those are very complicated. So it's much simpler when you have a market where the issuer is involved, providing disclosure, either a Reg A plus issuer, or a Reg CF issuer, or an issuer that's willing to provide the requirement under Section 487 for securities that were placed under Rule 506. In those situations, you have disclosure available to buyers. You're not limited to accredited investors buying those stocks in many instances. And trading can happen much more rapidly. So if you're working with an issuer who's willing to waive the right of first refusal, then you can actually have, you know, more real-time liquidity. And I think the previous panel, you know, we're not talked about this a little bit. We're not talking about public exchange level liquidity for these shares. We're talking about a very different model where maybe an auction is held once a month, once a quarter, once a year for buyers and sellers who are willing to engage in an auction. A clearing price is set, and anybody who's at or above that clearing price gets an allocation to sell or buy. And then the broker dealer handles all the closing elements of the closing of that transaction. You could have what looks more like an open order book. So a company is willing to provide that information that allows real-time trading. Again, kind of there might be a list of sell orders and buy orders, and they get matched by the broker dealer as that match occurs. So that's an option that's, I think, much simpler in the digital space than it is in the traditional space.
And if I could just, I'm so sorry, Anne-Marie, but if I can just pop in, that's actually, so for Reg CF and Reg A issuers, that's actually how Rialto does it. We've got two different modes of operation, and the one that we're going to be demonstrating tonight is the lit, we call it the lit order book, but it's firm lit orders that are displayed, and you can actually affect transactions against those lit orders. So people put in their orders, and you can go in and you can actually transact directly against those orders. The other interesting, I think, difference that, you know, I don't think about a lot, but I think it is interesting to highlight is we have direct retail investors that are subscribers of, we call them subscribers, but they're subscribers of the ATS. So it's that retail investors interacting directly with that book. So it's not a broker to broker model, but retail investors interacting directly in that liquidity pool.
Right, so you don't have any prohibitions on who can enter the platform. So any retail investor could come onto your platform and see what's for sale, decide that they want to buy it, and then put in an order to buy it. And anyone who owns the shares can freely sell them without limitations. That's a very positive model for investors. I think it's just not consistent with what happens around privately placed securities in the Reg D space. So what's great is we're seeing a proliferation of different models that suit the actual exemption that was relied on. So Reg CF, Reg A plus, and Reg D, very different models, but provide a level of liquidity that's really important to investors and to the issuer.
If I could interrupt for a second, though, the public shouldn't be left with the idea that they can just wander into an ATS unvetted. The broker dealer still has to approve all its customers that, and know them.
I'm just suggesting there's no wall, there's no accreditation wall that exists for the other model where it's only available to accredited investors. So all investors that interact with the broker dealers, I'm just saying, go through an anti-money laundering and know your client process, which basically means that you'll fill in information as you try to access the platform. You'll give them your name, your address, your birth date. You'll provide an ID, so a passport or a license picture. And then the broker dealer will run a compliance process that includes making sure that you're not on a terrorist watch list, which is never a good thing for a broker dealer to have a participant who's an OFAC problem. So those are all processes that every BD runs, just like Linda's suggesting. Those are very important parts of the process.
Exactly. So, I think as you were talking about a lot of the restrictions and other items in terms of Reg D and some of the other forms, people that are listening to this live YouTube and will be listening to the webcast really are focused on Regulation A and CF. So I think the benefit of that is that these securities are freely tradable and won't have those restrictions on them. One, and two, for Regulation A, they're going to be freely tradable, and for Regulation CF, there will be the 1 year period on them, but then post that, they will be able to be tradable. So I think the benefit for the folks that are tuning in now is a lot of the restrictions associated with some of the other workflows that you were describing don't apply, which is helpful.
It is helpful. The other thing about Reg A plus with Tier 2, and you're providing, ongoing periodic reporting, you can also graduate up to a public exchange. So if you decide at some point you want to be listed on NASDAQ or another public exchange, you can do that by filing a fairly simple registration statement with the SEC. So that's another really big plus of Reg A plus Tier 2. You have real liquidity on a platform like Rialto, or you can move up to full public liquidity if you choose to do that.
Exactly. Sarah, in terms of, issuers, when they're thinking about listing on an ATS, what considerations, when you're walking people through this, what considerations should they be thinking about? How should they be thinking about this?
Excuse me. One of the things that comes up again and again is the difficulty of pricing under Reg A when you have a trading market. Sometimes in the early days, especially, some of our clients kind of could not work out the fact that if you have a trading market, especially if it's a sort of active one as opposed to just trading every Tuesday, if you have an active trading market, then that's your price. You are not going to be able to price Reg A above that, because the very simple fact, if you can buy it from somebody else at 3, nobody's going to buy it from you at 5. And complicating that is the fact that Reg A does not permit at the market offerings, which means that you can't just say, well, whatever the market says, because it's a straight up prohibition in Reg A, and that has been one of the issues with respect that we've run into problems with, is once you open the markets, the markets determine what your price is. I mean, this is capitalism, right? That's where it is. And if you're going out with a stupid price, the market's going to undermine that. So yeah, once you have a trading market, that's gonna set your price. And that's something just issues of it, and you can't go back. You can't just you know, the market doesn't understand me. I mean, for the whole of my career, I have had conversations with CFOs and CEOs who think that they are vastly underpriced because the market doesn't understand them, and yet the market might not, but that's your problem.
Yeah, absolutely, absolutely. Are there any other different regulatory considerations for different ATS structures that should be considered? Either Sarah or Anne Marie. I don't know, Sarah, if you want to maybe start and then go to Anne Marie.
No, I mean, from our point of view, it's I think, you know, you just it's a matter of disclosure. I mean, choose where you're going to get traded, if you are going to get traded, if you've got an offering at the same time. Otherwise, if you don't have an open offering, yeah, just choose the market that works best for you.
I would also say, like, the benefit of building blockchain into this ATS structure is fairly significant from an efficiency point of view, because once the participant's gone through your onboarding process, then subsequent sales are automated. So their AML, KYC, anti-money laundering, know your client approvals have already been built into the platform. Issuers can have control over who could buy the stock if they want to or they care to. So the automation of compliance and closing functionality that utilizes blockchain, I think, is going to be something that every market adopts over time. It's just in this private company space, it's already been adopted, and I think it really adds a huge amount of efficiency to the processes.
That's really great. So in terms of, you know, I guess I'll start with Sarah in terms of any predictions you've got for the industry, specifically, you know, Reg A plus, you know, in terms of Reg A plus and the beginning, we're just at, you know, the very first inning of secondary markets in this space. Where do you think we are in 2 years?
I think we will have more trading. I mean, that's the first part, because everybody is just standing up now. And I think people will start to, the market will start to understand what the implications of having a trading market are, and what the preconditions to that trading market. And the things I talked about earlier, can you really have rights of first refusal? I mean, you can't, you're either, it's like being pregnant. You are you or you aren't. You know, you can't be, well, I want to have a trading market, but only under the following circumstances. And it doesn't really work that way. That's not what a market is. So there will be some acceptance of that. On the regulatory side, I don't see anything happening. I mean, I think we for the next few years, we have to work with what we have, both on the legislative and the regulatory side. And I think we can.
So do you mean in terms of private markets? Do you mean in terms of the digital side? Do you mean in terms of everything?
Well, private markets, especially digital, maybe. I mean, I would love to sort of go to the points that Anne Marie was making earlier, which is, look, you know, there's nothing weird about this. It's not different. The blockchain is just a really, really fancy Excel spreadsheet. That's all it is. And once people can sort of get over the fact that, you know, blockchain's not a different animal, then we can all just relax and get to you know, focusing on applying the current rules to this new, rather good, you know, technology.
I may have said that a number of times. And it may or may not have been received. Anne Marie, do you want to, you know, talk about, you know, what you think 2 years out? You've been in from a private market standpoint, but maybe for the Reg A plus issuers out there, what you think from their standpoint, how you think this slice of the market is going to evolve.
Well, I think with the ability of companies to raise really substantial capital on a rolling 12-month basis, that Reg A Plus is going to continue to grow in popularity, and the fact that the securities are able to be sold, fairly freely if you're satisfying the emergence process that Sarah described, I think it's going to become an even better tool. There were some companies early on in the Reg A Plus Tier 2 space that, listed on a national market, and I think they struggle to find their niche. So starting in a private market for those securities and then moving on to a public when they're the right size, I think will become a really interesting path to provide increasing liquidity over time. We all, I think most of us at least, have tried really hard to convince the SEC and Congress to provide preemption for Tier 2 securities, so state preemption. These are companies that are pushing out substantial amounts of public disclosures. The idea that they couldn't freely resell their securities is inconsistent, I think, with the overall ability of investors to understand what they're buying and selling. So I'd like to see the market continue to push for preemption for private resales of Tier 2 securities. If that happens, that will, I think, make private market trading, even more interesting for issuers. So I think there's stuff to come. I think Sarah's right, in the digital space. There's some confusion whether it's accidental or knowing. I'm not sure which. I used to work at the SEC, as did Sarah, so we're not going to bash our own family, but it just seems confusing that they can't divide a crypto asset from a traditional security that's just represented in a new technology. So I'm hoping that growing and learning on the part of the staff continues, and that we get there fast, but we'll see.
That's great. That's great. And Linda, for those Reg A issuers that are out there, what do you think, are there new things to come, 2 years out that they can be looking forward to in terms of this industry from a secondary market perspective?
I think the secondary markets are very important for anything, whether it's crowdfunding or Reg A or Reg D. And one of my particular flags that I've been carrying around lately is the ability of a community to invest in its own entrepreneurs. And I particularly see crowdfunding as a vehicle for this. And we haven't talked about the effect of the pandemic, but the pandemic had a particularly difficult effect on entrepreneurs of color. And so it is my hope, and I'm an eternal optimist, that entrepreneurs will be able to attract capital from their own communities through vehicles like crowdfunding, and then eventually move on to Reg A, and then maybe, if they want to, become public companies. I think that these steps that the SEC has taken to enable issuers to raise capital more easily are terrific. The problem, I think one of the big stumbling blocks for secondary trading are the states. Protect their own investors. Here we go again. Unstable. Sorry. We at the American Bar Association are working very hard on the problem of bringing the states into the discussion and making them feel like they definitely have a seat at the table very close to the head.
Great. Okay. Thank you very much, Linda. Appreciate that. I think you're going in and out a little bit.
I'm done.
Okay.
No, I mean, I made my pitch. I really care about entrepreneurs from underserved communities. They're not getting served well by the banks. They're not getting served well by the establishment of broker dealers. And I think that these tools that we have through Reg A, through crowdfunding, as enhanced by the ability to have secondary trading so that people can get out of the stocks that they buy are terrific. And I'm hoping that it's at least a partial solution to the economic damage that has been done to communities and entrepreneurs of color.
Great. So I know we've got a couple minutes before we end, and I just want to recap. So in terms of secondary market trading, we've come a long way in terms of where we've been with the Jobs Act, following on from what David started out with today. And, we're still in very, very early days, as he also said. We have ATSs today, and as Rialto is. And, while there isn't liquidity from an IBM perspective, there is the ability to reduce friction in terms of place securities on an alternative trading system and have reduced friction and have companies give their investors the ability to monetize their shares on alternative trading systems. So I think that hopefully recaps for everyone out there what we were discussing today. I will turn it over to, I guess, Lee Seba.
Yep,
Great.
that's right.
Or
All
Oscar.
right, we got the next panel coming in. Thank you, everyone. Sherry,
Thanks.
Sarah, Anne-Marie, and Linda. That was great to have you. It's starting the day off this afternoon, having the great discussion about what is secondary market trading. And obviously that discussion can go in so many different directions, but obviously I know everyone is really focused on the regulations at hand that we have here today, which is Regulation CF, Regulation A, which is the regulations that are actually making the difference today for everyone involved. And so this is going to be one of those exciting journeys that I know a lot of you are sending questions. Thank you. We are getting them. We're going to compile them all and answer them today. We're going to have a fireside chat at the end where Sherry and Sarah will sit down and with a few others to answer your questions, because they're great. Thank you. And I know, Lee, you were asking if people, they are bringing in the questions. Enjoy the conversation. And, keeping with the theme, of course, we're talking about Regulation CF, we're talking about Regulation A, and really excited with this next panel of experts. Lee, the floor is yours, sir.
Great. Thank you, Oscar. And hello, everyone, and welcome. My name is Lee Seba, and I'm the head of market structure for Rialto Markets. I believe you heard quite a bit about Rialto from the previous panel, which was an excellent discussion with some very fine experts. So today, my job is easy because we're talking about a very unique and exciting topic around secondary trading. We titled this panel "Building the Network and Diversifying Customer Acquisition." We'll discuss today secondary market trading for private assets and how it's been a tremendous challenge for the industry. And it's been almost unheard of until now. The ability to trade into or out of an existing position is now real, and it operates under a qualified alternative trading system. This panel will discuss the various participants in the secondary market ecosystem for privates and what the future will bring. So with that, I'd like to introduce our esteemed panelists. And with that, I'll start with Steve.
Hello, Lee. Can you hear me? All good?
Yes.
All right, cool. So quick intro, Steve Stante, founder of Vanderbilt Financial Group, and we're big in the impact space and excited. I was so thrilled when I heard the last panelist talking about, Linda Lerner specifically talking about funding entrepreneurs, because I'm first and foremost an entrepreneur, and getting capital to impactful entrepreneurs is super important. So that's where I'm spending all of my time now, is being able to raise capital for entrepreneurs to help them scale and grow, impactful entrepreneurs, that is. So excited to be here, grateful for the invite.
Great, thank you. Maybe Bill?
Well, thanks, Lee, and thanks for having us here today. I'm Bill Humphrey, co-founder and CEO of New Direction Trust Company. So you might wonder why we're here, but all of our clients have always done secondary acquisitions, but they've never really been able to sell them unless they went out there and found the the buyer for them. So the idea of having those people be able to use their IRA and other tax sheltered funds, not only to get in from the get-go, but also to be able to get out when they need to, or get into something that they discover after that initial offering.
Great. Thank you, Bill. And Andy?
And good afternoon, everyone. My name is Andrew Korn. I'm the founder and CEO of E5a Integrated Marketing. We are a systematic, data-driven investor acquisition firm. And unbundling that, we basically look at data and also our creative advertising agency and focus exclusively on investor acquisition work and work extensively in investment products and also in Reg CF, and are very, very excited about having secondary markets for private securities.
Great. Thank you guys for the introductions. So we're going to start with a softball question. I like to start small and scale fast. So with that, why is secondary market trading important to private assets? And one thing I want to define as to what a secondary market is. The secondary market is the financial market in which previously issued financial instruments such as stocks or bonds are bought and sold. Obviously, Rialto, we run an SEC registered ATS, and that's just going to allow retail broker dealers and or institutions to place orders to trade their private securities. Again, it's a place to match buyers and sellers in a regulated fashion. So with that, again, why is secondary market trading important to private assets? And I don't know, maybe we can start with Steve on this one.
Yeah, so for me, it's huge. And from the perspective of RIAs, especially. So I own 2 BDs, 2 RIAs, few hundred advisors, and we had always prohibited having private securities that were billing for their asset value as not being permitted into an RIA billing. The reason being that the SEC was calling out a lot of different firms and penalizing them for essentially anything that had been billed previously. And the reason being that those assets were not tradable. They were illiquid. There wasn't anything the advisor could really establish that they were doing in order to earn those fees. So again, they were back charged, or they were told to reimburse their clients. And many did. And getting called out on a violation like that is not only financially painful, but also kind of makes you feel a little helpless. So what do? Do you do it in a BD? Again, I own 2 BDs. Do we charge a full boat fee, which can be lofty up to 10% in certain transactions, which can work for some clients and not for others? Or do you put it in the RIA and just charge a management fee over the period of the holding? And many of our advisors get a chance, are allowed to choose, given the option of having liquidity in the RIA for that private security. They would most likely choose the option to be able to charge a fee. So again, this whole opportunity to be able to have a secondary market for private securities answers a big why not in our firm, from an why not have private securities inside the RIA. And it allows us to be able to charge a fee as long as we're diligent about what it is that we're doing. So it's a great opportunity for us to solve that issue. And again, I've seen it over and over again where the SEC comes in and assesses that fee. And it's painful, because often in these deals, there's more work put into a private deal than there is that, something that's readily available to others. And so it does solve that issue, which I'm really grateful for.
Great. So it sounds like secondary trading obviously unlocks access to this market for RIAs. It releases some of the concern almost instantly.
Yeah, exactly. That's the point. The point is now you have liquidity. You know, we used to wish that there were death puts or so if God forbid the shareholder had passed and the estate was looking to liquidate for various reasons, paying estate tax or whatever. They just didn't choose to be part of it anymore. But this gives us an opportunity to at least go out to a market, get a fair price. At least that's, you know, making sure that we have many eyes on this, not that this is just one private investor or small number of investors, getting a bunch of people to at least bid and get best price for it versus what could happen in a lot of firms, which is it's done internally and then at a steep discount, you know, beyond perhaps what would happen if you had it in a market that was available to many.
Mm-hmm. So follow on question, maybe for Andrew, why did it take so long? What was the holdup?
Well, I don't really know the answer to that question. You know, we've been asking for this for years. You know, private securities well outnumber public securities. There are fewer and fewer public companies now than there were 5 years ago, 10 years ago. A lot of people blame that on Sarbanes-Oxley and other regulatory hurdles of being public. So, you know, I think part of what was holding this up was what would be the conduit that could bring a lot of these things together, and seeing a transfer agent and someone with ATS experience come together, along with all the people who have been involved with you guys on the regulatory side. You know, it's a very nice match, and you know, we'll make this viable. So that is my answer to that, which I know does not directly answer the question, but that is my perspective.
Great. Yeah, no, I would agree that, you know, it's long overdue. I think we have the perfect set of ingredients now. I believe we have the regulatory tailwinds, which are really, you know, facilitating this, and you know, it's quite exciting. You know, I think one of the things too that that might be a little misunderstood is that, you know, as we get into you know, true trading of these assets, they're gonna operate very similarly to existing assets in the, say, the, you know, the New Yorks and NASDAQs of the world. You know, they're going to have security IDs like QSIPs and CDALs and ISINs. They're going to have, you know, tickers. It's going to have the plumbing that looks exactly or very similar to the other markets. And I think that's going to ease the path in here, you know, for increased liquidity over time for secondary trading. And I think anywhere from retail to institutional will have those mechanisms now to start trading. So I'm just going to move on here a little bit. Who do you see as the main players for secondary trading right now? And, you know, maybe we'll throw that one to Bill to get started us.
Well, Lee, I think there are not very many, and of course Rialto emerging, but because from our perspective with self-directed IRAs, we were over here and the securities industry was over here.
Yep, we may have lost Bill here. The worldwide internet is struggling today because of all the people participating in this today.
Yes, probably. Can you hear me again?
Yeah, you're back.
Okay, good. So what I was saying is, with self-directed IRAs, they've always sort of been out in the sidelines, and the securities industry was barreling along on its own. But now we're coming together, and there are more and more people that have been in securities that want to get into private equity, for example, and have never really had an easy way of doing it. So I think as you guys are building and other people are building ways to cross that bridge and open up IRAs to these kind of investments, because a lot of people that have money have it in their IRA and they want to get into a private equity deal. And before, it's been really clunky and they have to do all the homework themselves. But now with other people, like Steve was saying, that there are a lot of people looking at a transaction now, which gives a lot of confidence. In the past, we've had people that have been, it's either the investment goes bankrupt or it goes public. And that was really the only two choices. But now somebody can say, well, I've ridden the risk through and I've gotten my return and I want to go somewhere else. I don't have to hold on until the end.
Yeah, agreed. Yeah, I mean, I can see a path forward where, again, it's greasing the skids here for easier access into these markets. And, I can see a whole host of participants from retail, obviously, to the RIAs, into the self-directed IRAs, into institutional flows, right? Because this is the private assets are the new kid on the block, and they have potentially interesting returns. And I think Wall Street will eventually turn their attention to this in full force. So that'll be very exciting, as we're building out this plumbing to access these.
Right.
Lee, I have a question for you from a compliance perspective. So, you say it's a new kid on the block, but obviously accredited and institutional investors have been doing this for a long time. So it's a new kid on the block for non-accredited investors, people who are not wealthy by the criteria has been established to qualify as an accredited investor. It's dangerous, right? So we got a little danger going on where people are going to start messing with their money in a certain way. And from your perspective, from where Rialto sits and so on, is there any bumpers, any kind of parameters that you will force on people to adhere to? Maybe not more than 10% of their net worth in any particular, or we wouldn't call it liquid because it's now in qualified money, the IRA money, right? Or so. Do you have any sort of parameters there when we're talking about being able to, and we're talking about secondary market, making purchases with your IRA, right? That's what we're talking about here.
Sure. Yeah. And I would actually, defer some of that to Bill, because there's probably some restrictions in there. But as far as the ATS goes, we do have, speed bumps. We do have to check with the transfer agent as well to make sure that, so-and-so has the shares to sell, and B, that the buyer actually has the cash position to buy that. So, and then under each one of the regulations, there's a slightly different, like you said, if it happens to be Reg D, right, it is accredited mostly only. So, you're not going to have quite those restrictions, but there are some other parameters that can be built in there. So yeah, we are going to have some speed bumps, but it's a very interesting question, and I'd love to hear Bill's response to that too.
Sure. And one of the nice things with self-directed accounts is the account owner gets to make all the decisions. So we're not going to say, hey, don't put all your eggs in that basket, because that's their choice. We're not advisors. We're just the custodian for the asset. But at the same time, people that have wanted to get into this market, private equity, they really didn't have any sort of safety net, if you will, of other investors participating with them and the ability to get out early. So we see it as much as the initial investment, providing the secondary market provides a comfort level after that. But to get in from the get-go for a brand new company, you're getting in with a bunch of other people, gives you some confidence. Our typical private equity deal now probably averages less than 10 investors, and we're not regulating them. We're just holding the asset. But it's interesting to see the group of people get together and fund this new startup. And now potentially they can not only fund it initially, but also have a nice trading market that diversifies a lot of the oversight risk, as well as the risk that you're going to be stuck forever.
Great. Andy.
So I'd like to chime in on this if I can. I think because there's an ATS and there's a way of people trading doesn't really mean that there will be. So if I use a case in point, something I think we're all familiar with, like the New York Stock Exchange, there'll be between 300 and 600 securities that don't trade today. So there we are on the largest marketplace in the world, and there are securities that don't trade for an entire month as well. So the whole thing comes down to, you guys are building something amazing here. Just because it's built, will they come? And essentially, liquidity starts with interest in the security and then price discovery. And I think, as they said on the last panel, that it's a free trading market. So how do I know how much Apple computer is worth? I can look right on my phone and get a quote on Apple and then decide whether I like the company, but maybe not at that price. So same thing with the secondary market. First, someone has to know that that security even exists. So one of the things we do working with issuers is create a little FOMO, some fear of missing out, and meaning directly after the deal closes, there should be more demand for it. But we are not in the investor relations business. So essentially, an issuer needs to decide if they want a robust trading environment. You're building the facility for it, but what are they going to do to create demand and supply of the stock so that there is trading? So that's a piece that I don't think a ton of issuers have thought about yet, but also in their defense, there wasn't a robust system in which these trades could take place at a reasonable cost. You know, as Steve was saying, it was done mostly by matching, and that sometimes could be very costly depending upon what the goal of the person trading was. So, you know, we see a lot of, like, right before Facebook went public, people were trading it, and a lot of them way overpaid. And if you look at the beginning of Reg A Plus, when it first started, a lot of them went public. I don't believe any of them are trading above their offering price. We're sitting here 5-6 years later. So now that had to do with the pricing by an investment bank and how they went public and demand. But now when you look at demand on something that's priced every 100th of a second, it's just not there, where the prices continue to go up. So anyway, I'd love to know what everyone else thinks about that.
No, I think it's a great perspective there. And I actually just have a slight follow-on question to that. When you're talking to issuers, what patterns do you see them taking to create that buzz? You know, if they want to list, like how do you get them to create that FOMO?
Well, so it's a two-part answer. First is that we're working with our very first issuer who will end up publicly listing using Reg A Plus. Most of the time, we discourage that and encourage companies to get to a point where they can go truly public, where they will be included in indices that are tracked by ETFs, because a ton of trading happens that way. If they're remaining private, though, you know, how do they use their stock for leverage? Like, how do they use their stock for executive compensation, where the time frame is not going to be 5 to 10 years potentially before there's a true liquidity event, a sale of the company, or going public? So this alternative trading allows all of a sudden that currency for them. And then to directly address your question, we basically, when we're creating a Reg A Plus offering, keep in mind my company doesn't sell securities. We are an advertising agency. Only registered broker-dealers sell securities. But we do drive the potential investors to the offering page and hopefully convince them to click that invest button. So the question really is, how many investors do we drive? And we have mathematical formula on that. To fulfill a $20 to $50 million raise, we know how many ad impressions, to clicks, to the number of visits to the page, number of clicks on the invest button, and then how many people complete the process. So being that we have control over that, because we've got models and benchmarks, we can slow that number, or we don't have to slow that number. And that's where essentially you can create a flurry at the end of people wanting to get in before it closes, and people who have missed that deadline. So that will then create demand immediately, because people didn't get in who wanted to get in.
Andrew,
yes.
Could I ask you a quick question on this? So
Please.
I imagine that people are going to be putting blocks up there of equities that are private in nature. That's the essence of this. But, you know, when we're raising capital, we're doing the dog and pony, we're doing the pitch decks, we're doing the sizzle reels, all that good stuff, right? And they're in a Reg D, you don't have audited financials, and Reg A plus you do, right? But who's going to be able to have access to them? I did actually get a chance to view the system at Rialto and see the scorecards and so on. So it had a lot of good information on it. But, you know, if one individual from a company is selling or one investor is selling, there's not going to be all that information that's out there. And I just don't know how to create the FOMO and how to create, unless there's, you know, and I think Rialto is doing this. They build a system that can pick up our preferences and get notified and that sort of thing when something in a particular sleeve of interest comes up. So, but how do you learn about a company that did a private offering 6 years ago and nothing's been public ever since?
Well, that's the big question. And that's why I started with, look how many stocks won't trade, not only on the New York, but there's stocks on the NASDAQ that won't trade today. So a company either has to have an ongoing investor relations program, which is reaching out not only to current investors, but investors that have been lost, or investors that should be interested because they own other companies, not only in the same sector, but the same subsector. One of the things that we do is all the data that's gathered during the offering is owned by the company. So if it took 100,000 people to the offering page to get 7,000 investors, and that's not always the math, by the way, that's just an example, they have 93,000 other ad tags, and they can continue advertising to those people. They can sell them product, and they can also let them know about secondary markets.
That would be fair. That would be super fair if they said, hey, by the way, it's being offered up on Rialto. You know, if you want to get more of these shares, jump in and do it. That would be very fair. I think that makes a lot of sense. And that's really smart.
But then there has to be a seller, and those ad tags don't last forever. So when you ask the question about a company 6 years ago, there's an awful lot of ongoing communications to create liquidity like that. And, you know, we see this all the time on stocks that don't trade very often, that the gap between the bid and the ask is very large, and people, quote, get scalped, and smart traders know how to work around that. Excuse me. And that's going to be a real issue from an investor, both seller and buyer, when something has not been trading for a long time. So, you know, when there's an event and a company hits a certain milestone and publicizes it, there might be an awful lot of people who are interested in that security at that moment in time and create demand. But 6 or 10 weeks later, that may not be the case. Mm-hmm. So, you know, these are ongoing communications issues that there's actually an entire industry around, but most of that industry is focused on the publicly traded markets. So, you know, I think so much of what this group does is, you know, frontier-like, and this is yet another frontier that needs to be conquered. But it could never be done without the right technology and the right group of people getting together to do it. And that's why I was excited to participate in this, was knowing who was behind this.
No, that's great. I think that's a nice segue into, you know, another line of questioning here is, like, you know, we were talking earlier about, you know, what's it mean for an issuer to list, you know, on an execution venue, you know, like an ATS, and what that means for, you know, talk a little bit about liquidity options and, you know, how much is there. You know, Steve, you just mentioned that, you know, if there is a little bit of FOMO, maybe there isn't a seller, right? Maybe there isn't a buyer. But, you know, one of the things that we've seen a trend on is, you know, some of these, you know, employee stock plans, you know, ESOP plans, you know, where employees, you know, actually, you know, can benefit because of the longevity of some of these private companies. You know, years ago it would be, oh, you know, I'm going to go to a startup. I know its time horizon is, I don't know, I'm going to make it up 3 to 5 years. I'm going to get half my salary in stock. And then, something will happen at the end of that. Now these companies are staying private for so much longer. And that 3 to 5 year time horizon is now turning into 8, 9, 10, 12, 15 years. And yet a big chunk of your compensation is tied up in that. I think, you can see where this is going. How do employers need to think about these shares listing, and listing on an execution venue or like an ATS as an attractive employment option, right? To bring people into their company, but also, I think once you get in the ecosystem, it actually provides, it's like a yin and yang process almost, right? So people can get out because they have a life event, right? Maybe they want to buy a home or pay off some student debt, or they have a child. Now they have an option to realize something that's actually part of their compensation package. And I'll throw it out there, see what you guys think about that. Maybe Steve. I know
I'm a huge fan of ESOPs. So again, I'm first and foremost an entrepreneur. I'm actually writing a book called The War and Art of Funding, an insider's guide for raising capital through storytelling for entrepreneurs. And that's the number one question. When does it end? How do I get my money out? What's going to be the liquidity? Because we all get excited about the new idea and all that, and things. Some of the most successful capital raises I've seen have been for people who have a very clear path. Their Series A, Series B, Series C, or they know where there's going to be a public offering at some point. And so I'm a huge fan when it comes to this, but in the ESOP world, it's a great way to bring people in on your team, discount their salaries so they feel that they're going to get some additional comp that'll make them all gajillionaires, if there's such a word, and people will get paid off for their hard work. I think it makes a lot of sense. It makes a tremendous amount of sense. And I think in a lot of these ESOP deals, the company may want to monitor and possibly buy back, especially if they see their shares are going to be going for nothing, right? They're going to be, that'll be a great time to scoop it up. But they do have an annual valuation. In my experience with ESOPs, there is a valuation. I believe it's annual. And I believe Bill probably knows this answer better than me. I'm pretty certain it's all qualified money. Is that right, Bill?
Depending on the plan, if it shows up as compensation for them, then no, but they can have options that are diverted into the plan, just depending on how the original plan document is written up.
God, I know Tony Robbins did I think $100 million ESOP plan for one of his companies, and a guy named Rich Harmon had done the plan or advised them on the whole plan. And those were all retirement assets where they could fund it. A bank funded 60 or 70% of it, and everybody got paid. Everybody was part of that deal. But being able to go out to a third party will help, at least for the employee, also to know that they're getting paid fairly. So I think there's a lot of value to that. They could buy back cheaper, possibly, but also know that they're getting dealt with fairly. So I think it makes an awful lot of sense when you provide that liquidity to a person, especially for those life events that could occur in the company that put out the shares doesn't have the ability to buy it back or doesn't have a preference to buy it back.
Mm-hmm. So, yeah, I'm a very big fan also. I agree with Steve on ESOPs and any type of equity compensation. I think it's a huge alignment of motives for employer, employees, management, everyone rowing in the same direction. I certainly have made a bunch of money that way. I've been chief marketing officer of 2 public companies. My option grants were certainly paid off more than my salary. That was a very big thing. But the question for me on this again is then it's a liquidity happens when there are buyers and sellers, and there can only be buyers and sellers when people know about it. So my question here we are on kind of day one of when will I be able to connect to Rialto from my Fidelity account or my Schwab account? Because I'm a believer that one of the reasons I love Reg A is that I think every person, regardless of income, should have a percent of an allocation to privately held companies. That was something that was restricted just to accredited investors until recently. And, you know, this would be a great way of someone building something. It's, I'm a big fan of Kathy Wood and ARC and own a bunch of their ETFs. So if someone's really interested in robotics, they might want to own the publics, but maybe they want to own a bunch of privates as well, or instead of, and have an allocation there. So, you know, how easy is it going to be? I'm assuming you're not connecting to those big online trading programs in the next, you know, how easy or hard will it be to onboard me, Joe Investor, to be able to go in and do that? I'm curious.
Yeah. No, I mean, I can take a stab at that. So, you know, obviously we would love to connect into those folks. And I would imagine that that is going to be quite popular. You know, we're building out infrastructure right now on an institutional grade to consume that type of flow. So, I don't know, there's something called the fixed messaging, which is pretty popular in institutional financial electronic trading. And, you know, we would build in the pipes directly to there to access the ATS directly. So if you have your Fidelity or Schwab terminal, right, you know, we would be another market center underneath there for the private assets that they would potentially list that we would have on our ATS to match, but they would also be, you know, working in one massive pool across, you know, the Fidelity folks could be working with the Schwab folks, could be working with the, you know, TD Ameritrade, whoever it might be, right? So
that would add to liquidity.
That would add to liquidity for sure. And obviously, if you mix it in with some retail and the RIA networks, you know, we're starting to generate something, right? Obviously, you can't promise liquidity. I mean, that's like you were saying earlier. There's on the big exchanges, there's stocks that don't move or trade at all, and you know, that is part of the challenge, and you know, we're ready for it, but you know, we can't promise that. However, we are building out the pipes, the plumbing, to be able to facilitate those access points into our ATS.
It would seem to make a lot of sense for companies that are having ESOPs or doing Reg A's or Reg D's or whatever the like, to have the ability to register with Rialto, do something. I guess it would be a custodian relationship. Is that what it would be, Lee? You'd be able to have their registrations at least made aware, registrants made aware that a secondary market exists, and they would maybe have first dibs or at least dibs on being able to invest more into the company. That would just seem to make a lot of sense for people to be notified when shares in their company are doing something.
Yeah, for sure. So obviously, you know, working with the transfer agent, you know, like obviously Core Connects, we're connected into them very, very tightly. And, you know, assuming that the company is, you know, is leveraging Core Connects, we would be able to, you know, like the company would be able to say, you know, listen, you know, sign up with Rialto, and you know, you're already on the books and the cap table over at Core Connects. You can now, you know, have a liquidity event if there's shares to buy and sell out there. And again, I think part of that is probably just what you were talking about a little bit earlier there, Andrew, is around, I don't know if it's FOMO necessarily, but just that the options exist, you know, to exit this. And I think that would be very welcoming to their shareholders, especially their internal employee shareholders. So yeah, we can facilitate that for sure. And again, you know, having great partners like Core Connects And being so tightly integrated with them allows us that ability pretty quickly.
And one other option, just since we're on the employer-employee page, what we see is people wanting to invest in their own company with their own IRA. So we've actually seen not management necessarily, but the line staff and middle management can have their IRA be an investor in the company that they're working for, whereas they don't have any money in their pocket, but they've got this retirement plan. Suddenly they can get in and out easily that wasn't an option for them previously. So it opens a lot of doors for not just ESOPs, but employees as well.
Bill, I'm curious on that. You're talking Sidra into a company's own, an employee or so investing in a company's offering, I suppose it would have to be Reg A because they'd have to be, if they were non-accredited. Is that arm's length enough, would you say, for an investor?
Depending on what function they perform with their employer. So if they have power to control certain things, then no. But if they're just an employee, less than 10% ownership already of the company, sometimes more, but they have to be not high enough that they can control things such that it would be a conflict with their own IRA getting an extra benefit or vice versa for the employee.
I mean, the questions about the company itself for an outside investor are just swirling around in my head as an investor to jump into something that a Sidra went into a private company. Wow. Lee, how have you handled that? What's the information flow? How do people get educated?
Well, you go to the KoreSummit and you listen to this panel or you replay it on YouTube, first of all. No, I think, because of the panelists, because of, we're trying to spread the news, right? And make people aware. I think that's one of all of our challenges right now is to get the word out that this market is here and that we're ready to, start opening the floodgates. So it's an educational thing, really. I don't think there's anything like technically stopping us. Like we have the plumbing, we've got the transfer agents, we've got the BDs, we've got the ATSs, we've got the regulatory tailwinds to do this. We've got, companies like Bill and Andrews and yours to start, accessing these markets. So it's here. It's just a matter of time and continuing education.
Yeah, I've been investing in private companies as an individual for 20 plus years. I've started a bunch of companies like Steve. I'm an entrepreneur. So I live in New York City. What I do for a living, I see a lot of deal flow. But I can tell you that I now have a portfolio of Reg CFs and a portfolio of Reg A pluses, which even I, sitting in my seat, would have never had the opportunity to learn about those companies. So, kind of like a prosecutor, I look at the private markets, it's motive and opportunity. And the opportunity wasn't there until CF and A plus. And then if you miss that, then the opportunity on the secondary markets wasn't there until now. So you've got opportunity finally, back to the why did it take so long, but now you need motive. If there is, going back to the robotics, if there's some robotics company that's incredible, but I've never heard of them, I'm never going to buy their security. So, the motive part needs to be there. And that is partially up to the customer to do, as well as, our whole ecosystem as well. At least that's one way of looking at it.
Yeah, no, I love that analogy. If you missed it in the primary, you've got another shot at it now, right?
It's because when Apple went public, that the IPO was their offering, and there was a certain amount of time with that, and then the secondary market is now on the NASDAQ. So when a company does a Reg A, they may go 10 months on it, and that's their offering period. But now there was no secondary market, and now there is a secondary market. The question is the company going to be high profile or low profile? Are they going to be growing rapidly? What's going to be the motivation to get people to say, I would pay X amount? I always know how much, and I keep going to Apple, how much it's worth, because I can check the price. And there are enough buyers and sellers that it's a very, very tight spread. So the question again in secondary markets is how many buyers and sellers will there be, and how tight will those spreads be? And how much will that reflect the fundamentals of the company?
Yeah, I think it's difficult to ascertain right now because, most of us come from traditional financial services and the big markets, and those spreads are as tight as possible, right? I mean, the market's very efficient. I don't think this market's going to be that efficient for some time, but I think the point is it a good investment for you? And is it the right investment, based upon your research and what you've done, and now you have access to these early stage companies. I think, pricing is important, but we're also not doing low latent, arbitrage about how fast it's going from, some pop in downtown New York to Wawa and trying to jump it. We're not there. And I don't want to be there, to be honest with you. I don't think that that's a good position to be in either. I think it's just really, this is an overused term, but democratizing these markets and getting people those access points, whether it's primary or secondary, right? You get the other chance, and then you can watch it grow, or hopefully grow, and exit when you needed to.
And you know who the biggest consumer for these deals are? Secondary market. I mean, maybe I'm just surrounded by entrepreneurs. It was funny. I was with a kid down in the Bahamas. My son had brought one of his college roommates, and it said to him, "How many entrepreneurs do you know?" He goes, "Including you?" I said, "Yeah." He goes, "One." I'm like, okay. So people don't get access to entrepreneurs all that much, I guess. I don't know. It's just the circles I run in. But when I talk to them, they want access to deals. We like being on that journey with entrepreneurs. I mean, I paid $140,000 for my first Tesla, and I had been told I was an idiot because I would lose money. I did lose money. But the reality was that I was supporting Elon, the guy on my right. That's Elon, right? Entrepreneur Magazine. I was supporting Elon, who was taking lots of chances, lots of risks. One of my favorite movies, Revenge of the Electric Car. Love it. If you haven't seen that documentary, take a look at it. But that is a big buyer for these deals, being able to sit there and look and figure out, what they'd like to be in, and they're typically going to be accredited. But, I can tell you from my sales force what's hot. Talk about FOMO, Andrew. So if you could come up with a robotic AI-derived cannabis company that had crypto as its exchange and blockchain ran the whole thing, man, you'd have people lined up. Would you agree?
It certainly is every buzzword in one place, but I have to do a shameless plug for my data team. Is they got me to open my wallet to purchase essentially the management of every private company that sold, that the records can be dug up on in the past 18 months. And that data set outperforms just about anything else we have, regardless of what sector the offering is in. So I agree with
is that?
Excuse me?
What kind of technology?
It was a straight data purchase from some data miners. And, from there, we're able to create custom audiences and also run email campaigns, although you can't really run email till you get an opt-in relationship. But, that it's a small data set compared to others, but it does extremely well. So I agree with you 100% on entrepreneurs and love to invest in other entrepreneurs.
We get a thrill out of risk. And I think it was Steve Jobs said it. Learn how to bet big, but don't bet the farm. That was his saying. And that's what these opportunities are, is often not too expensive. You're getting at maybe a deep discount, and an opportunity to be able to invest in a company that down the road could be amazing and huge.
So Steve, you mentioned crypto and cannabis. Obviously those are hot topics, right? What are you seeing in your networks about about those companies? Obviously, maybe anything with those titles. I mean, I remember a couple of years ago there was an iced tea company that just put blockchain in their name, and they went bananas, even though it had nothing to do with blockchain. I'm hoping it's not quite as bad as that, but I'd love to hear you say a few things about that.
Well, on the cannabis side, the biggest challenge is a lot of the first state regulators, banks, etc. You're unable to do the business. You could buy it through certain vehicles, ETFs or so, but buying directly into those companies, we can't offer it often, especially being regulated by FINRA and SEC. There's certain things that we can't do. Our clearing firm, NFS or Fidelity, often has issues with certain things in that space. I don't even believe they're allowing crypto at this moment. Actually, I know that for a fact. And people are asking for it. So what do? You go to Bill, you say, hey, Bill, could we set up a SIDR for this person to be able to do crypto? Bill, do you accept crypto, or can people buy crypto in your SIDRs?
We do. Currently, we're sort of battling the variety of stuff and tracking it, but we do have a fair number of people that invested in the more mainstream Bitcoin offerings. But as it explodes, I suspect there will be specific trading platforms, but IRA can certainly invest through that platform easily. Cannabis, not so much, but
right. It's
because,
great.
like you said, it's a federal law, and the IRA is a federal mandated entity. So, but just on that, I live in Colorado and looking out and seeing that there's some pretty rich people running around here that made their money exclusively from cannabis, and that money is going into the system of buying shares of Apple and IBM, and there's no way it's going to stay separate forever.
Mm-hmm.
And maybe under this administration, they'd bring it, federally allowable. Who knows? But that's clear. It's clear what the clients are asking for, and like from the least likely of people, 80 and 90-year-olds asking about cannabis investment and how they just had a fun time with an edible with their neighbor or something, and it's just top of mind. And then on the crypto side, just having it in the news so often that people feel like they're missing out. That's the fear of missing out that we're experiencing on a pretty regular basis, and it's challenging. I do have some of my advisors that trade in crypto or experts in crypto, but being able to place those trades directly into are often very challenging.
Yeah, that's a nice segue into our next question here, and we have just a little under 10 minutes now. But what does the future look like for private markets? And again, let's look at the next 2 to 3 years, and then maybe a long-term forecast. And maybe we'll start with Andrew.
Well, I just want to make one comment, which is to Bill, which is I think there were a lot of people making a lot of money on cannabis for a long time. So they just may have not been
visible now.
They weren't visible anyway. So, the private markets have always been huge. The big news is they're now open to non-accredited investors. And there's the whole thing, my firm does a lot of, no, we don't want to have a second meeting with an issuer because we don't believe we can help them sell the securities. So we kind of break it right now into 3 buckets. Our favorite space is the impact space. Next after that is the yield, people who are companies that are able to deliver monthly income. And then third, and that frequently overlaps, by the way, like with solar deals, things like that are paying monthly income. And then from there, innovation, where people are buying a lottery ticket on like the robotics company, or like Steve said with Elon and the electric vehicles. I see the market at the top of the first inning still, even this number of years in. And we are seeing more and more quality issuers, which I think are quality issuers are only going to help the secondary markets, and that will lift everyone else as well as people become aware of, gee, it doesn't trade. I can't maybe buy it with my Fidelity account, but I can go to Rialto and buy it on the secondary market, or I'm able to trade those shares. So I think that we are really still in the beginning innings. And as long as there's not another huge hiccup, like the mispricing of securities of the ones that went public very early on, kind of shut down Reg A for a while. And as long as we all keep doing our jobs and refining and optimizing our best practices, I think this is an enormous future, and just a social comment of we're opening up wealth opportunities to people who didn't have them before, both the entrepreneurs and the investors. And I'm very proud to be a part of it.
Great. Thank you, Andrew. I don't know, Bill, would you like to comment on that?
Yeah, I think just listening to the panel, I'm seeing even more opportunity than I did before, because like Andy said, how is this company that's going to continue to keep itself in front of investors? And one of the things we've noticed, people invest in a private equity offering and then it goes silent. They don't know what's going on, and the company doesn't really have any incentive because they've done their one raise, so they're not providing quarterly updates or any communications. But now with the secondary market, there'll be more pressure and more obligation on the company to keep current and say what's going on, for better or worse. Lots of times you hear better, but not the worst. But now there'll be an ongoing stream, I hope. And as our business has evolved over 18 years, we're seeing more and more of high dollar people that want to get their IRA or their retirement asset into something small, because that's where the return is. And most of it's happening in the private stage rather than the public stage. So I think we're just at the first inning is a good analogy.
Great. Thank you, Bill. And Steve, you're batting cleanup. We're close to getting the hook here. So
there you go. So I think Bill hit the nail on the head. You know, if Rialto would be willing to be a platform for companies to do quarterly meetings with their shareholders and anybody that might be interested in learning about those companies, that could level the playing field. A recorded Zoom call that they could go back to and reference, especially when shares come up. And back to what Andrew said about the impact space. So I consider myself a leader in the impact space. And this private space is following a very similar path, because when I got into the impact space, it was all Reg D. It was all, crowdfunding. It was things that not everybody could be part of, perhaps. And now suddenly more people are able to align their values, their support of a particular sector, a particular entrepreneur, call it a woman entrepreneur, a Black entrepreneur, an Asian entrepreneur. You pick your favorite line of investment, and you can have your investing in line with what it is that you're passionate about. And so here's an opportunity to not feel like you missed the ball game, but you're coming in the 7th or 8th inning to be able to jump in and maybe hit a home run. So, that could be what ends up happening in this circumstance. But I really think it's very timely, because what this pandemic has done is given a lot of entrepreneurs the ability to operate very virtually and become very profitable. And opportunities are arising pretty regularly in the entrepreneurial world, and people are looking to liquidate and move to another company or do so. And I think this is just a great opportunity to be able to facilitate that for us to be able to raise capital, scale and grow, especially impactful companies.
fantastic. Well, thank you guys. I think with that, we're gonna close it down. Really appreciate your time and your insight today. I want to thank also the staff who helped put this event together. They did a great job. So thanks again, and we'll hand it over to Oscar.
Great. Thank you, Lee. That was great. I really appreciate everyone's point of view this afternoon. This was great to hear everyone and discussing the whole effect of having everyone involved in the importance of reporting, and obviously how the market is actually changing. I think Steve's comment in the end was really critical, as that we're so used to only hearing of Reg D, but the world has changed. COVID-19 has put a different spotlight on this. A new chapter opens. Remember what David Wheel said at the beginning. We're talking about a brand new chapter, a new door. And this new door we're about to bring on now is one that we have not seen before. We have not seen this door open here before. Obviously, the crowd is excited about it and trying to get things moving forward. And I hand it over to Joel, because research, price discovery, it's all new for the private market. So enjoy.
Thank you, Oscar. Appreciate it. Thank you for joining us, for everyone for joining us. Very excited about this panel coming up now. We are going to be discussing the idea of research and price discovery in private markets and also in general what it takes in illiquid markets. Starting this whole episode, I wasn't sure how all three of these would fit in, but the two panels prior were really leading up perfectly to what we're going to discuss today, because what we started out with, the panel that Shari led, was basically explaining, how do I become an ATS? What needs to be done in order to create the ATS? We followed up with Lee's, where it was describing who is going to be involved in that ATS, who are the players. And now we're going to be discussing, well, now that we have the ATS built and we have the players involved, how can you trade? How's it going to work? What's the market structure going to look like? What's the best type of market for it? How am I going, a lot of the questions that came up in the last panel, how am I going to understand what the pricing should be? How am I going to know what to trade it at? And so we have what I think is really an excellent panel, just experts that we have, Bill, Sean, and Chris, who are really experts and have great experience in entrepreneurial decision-making on this research, not just the research in the standard way, but really doing it in an entrepreneurial way, thinking about it in different markets. And I think that's going to be very enlightening. David Weisberg is here also. Dave has extraordinary experience in algorithmic design and trading, model design and trading, and to be honest with you, knows more about market structure than anyone I know in this business. So I think we're going to be able to have a great panel. If you guys can all introduce yourselves, Chris, we'll start with you.
Sure. Well, thank you so much for having me, Joe. Great to be on this panel. And Oscar, thanks as always for hosting these wonderful events. My name is Chris Lustrino, founder and CEO of KingsCrowd. We're the first kind of rating analytics service for the online private markets, but I'm just a huge believer in the need for research as we bring the private markets to the general public and enable retail investors to invest in this new environment. So really excited to have this conversation, especially because secondaries is something that I think can really be transformative in doing something that's never been possible really at scale in the private market. So excited to have this conversation. Thanks for having me.
Thanks. Bill?
Good afternoon. Bill Walker from Marquette University, instructor of practice. 30 years in the investment business, managing a small cap growth portfolio for a large institution. Moved to the Marquette University AIM program, which is deeply involved in valuation, research, and every bucket you can think of for the investment process and understanding how to value companies.
Great. Sean?
Hi, thanks for having me. I work for Clear Rating as of about 2 months ago. I lead the day-to-day operations for our valuation and rating services, which include digital assets, which is kind of the topic of the day. Yeah, thanks for having me. But before that, I have a background in valuation, M&A advisory, and yeah, so it's a natural intersection. Thank you.
Thanks. David?
I'm Dave Weisberger. I'm the CEO of a company called CoinRoutes. We are a purpose-built algorithmic trading platform with consolidated data for trading digital assets. To date, that's mostly crypto, Bitcoin, Ethereum, and all of the other, kind of quasi-listed non-security platforms that are there. That said, most of my background is in the equity world, going back until CoinRoutes 5 years ago, was in market structure from companies where I worked with Joel, such as Lava, to running StatArb, to starting and then running the wholesale market maker at 2 Sigma Securities. So most of my adult life has been spent studying markets and price discovery, much less on the valuation side. I leave that to professionals such as the others on the panel. But in terms of every instant where things will trade, how liquidity works and interact, that's what we deal with. The one note I will make in terms of digital assets is, and kind of a funny segue to where we're probably going, is I was asked, how could I leave, the traditional markets to go to crypto? And the comment, and I was having breakfast with Larry Tabb at the time, and this was a few years ago. Larry has since opened his mind up a lot, but at the time that I said that within 20 years, all assets will trade digitally, I thought his head was going to explode until I started to explain why. There are lots of reasons for it, whether it's what are currently private companies, OTC companies, as opposed to NMS equities and or the equivalents overseas. The fact is, the artificial notion that one has to trade an asset against a single currency in their home market only, with huge regulatory hoops to do anything other than that from people outside of it in what has become a global business, is something that the digital world will break down. And I'm a very big believer that that will happen. I also know that these things take a lot more time than technologists think they're going to take, because of all of the regulatory issues and the incumbent issues, et cetera. So that's what I care about in the conversation.
Great, thanks. Yeah, so we're going to certainly get to hopefully all of those topics, and I think they're all essential and how they intertwine. To start things off, let's just try to build up to where we have to go to, and start with really not necessarily talking about private securities, not digital versus traditional, but simply illiquid securities. If you have illiquid securities, was mentioned in the last panel, there are plenty on the New York Stock Exchange and NASDAQ that are just as illiquid as anything else. So when having illiquid securities, starting even within the primary space, how do we come up with some kind of valuation? What's the methodology? Is it different or the same than we would have in Intel and Microsoft? Chris, you want to get us started?
Sure. So I think there's kind of 2 universes of thought on these types of things, even in the traditional primary markets. One is it's worth what people are willing to pay for it, right? And I think, my gosh, if we've ever seen realities of that, it's with all the GameStop and meme, stocks out there, which is basically people are willing to pay that price, then that's the price that it's going to be worth today, based on market demand and what people are willing to pay for it. And then the other part is kind of the fundamentals analysis. So I think in illiquid markets, you obviously need to rely a lot more on the fundamentals analysis, but it's kind of unique, especially in the private market universe. So I came from the private equity consulting world, where we were working on behalf of private equity clients, really to think about the valuation that they were purchasing these companies at. And one of the most powerful tools that you can utilize when thinking about, early stage and mid-market companies is really just proxies for companies like that. So if you're investing in a B2B SaaS company that's in, productivity in the workplace, then you're probably going to be looking at companies that, a company like Atlassian has acquired and what those valuations have looked like. And to the extent you can get, revenue multiples or things of that nature, you can start to say, okay, here's a company at a similar stage that was acquired at X. My company's illiquid. They traded at Y the last time that they raised capital. But if I look at what the market is calling for today, then I think they could be worth X. So I do think one of the best tools right now for illiquid securities is to kind of do the proxy test and look at what are some of the comparables out there that you can use to get a sense of what the market is valuing that company at today based on some general fundamentals. That's the first kind of 80-20 gut check that you can do to figure out the value of the company.
So if we're looking at that kind of valuation and we don't have the numbers that we necessarily want, is there another factor that one would look at, whether it's management or some other factor that can determine what most effective valuation would be? Sean, I don't know if you want to take a shot.
Yeah, so obviously when valuing private securities, management is probably one of the most important, if not the most important factor, especially considering the fact that there's very limited information in the private markets. What Chris said about finding market comps is extremely important, but also just assessing management's reputation, experience, the balance of their team, and their ability to actually reach that addressable market that you're finding these comps in. And then also considering if their business model varies between the market comps you're talking about, in particular margin structure. So if you have half the margin of these companies you're comparing it to on a price to sales basis, you're just, you're comparing apples to potatoes, and it's just one of those considerations you have to make.
So if we're looking at those kinds of valuations with the securities before anyone's going to invest, is there any method that can be done in order to determine what pricing might be in a marketplace, whether that's an available marketplace or really something that isn't as available, but just a buyer and seller just trying to come together? Is there something else that either one should consider as they're getting involved? Bill?
I think that, first of all, we know that a company is going to come public at some number. It's going to be coming public, whatever the management thinks the company's worth, and that's going to be a price item or total valuation. So you're going to get a pretty good idea, maybe often inflated, but maybe biased, maybe not, for the initial valuation. So that's a starting point. The next step from my standpoint is you can look at market opportunity, frankly, and say, where have other companies come from in this environment? Look at the market size and how they've evolved over that period of time. I often tell my students to look at how companies have, how the company evolved over, peer companies evolved over a period of time, and use that as a roadmap to help discern what how the revenue ramp would likely exist. That's kind of the way I would look at it, to say, and then looking at, combination of how companies have done in the past versus what the market opportunity is, and then try to gather some level of conviction for share, and then build out models based off of 5 to 10 years of how revenue is going to pan out over that period of time. I know this is all estimated. It's a very guesstimate on the model, but if you kind of circle the wagons in terms of where you're looking at, either comps, market opportunity, where the company initially came public, you got a pretty good idea. You got to put some fence posts up on what the valuation is.
So now we have a security that has some kind of way to come up with a valuation, some idea, maybe a ballpark of where it should be priced. So it's now going into a marketplace, and that marketplace, how do we structure that? What's the kind of structure? We have all kinds of different structures in the markets globally. What would be an ideal structure, or a good structure, even if we don't say ideal, for this type of market? I don't know, David, if you want to just sort of describe, and particularly against just staying with illiquid, doesn't have to be private or public, just illiquid.
Yeah, no, I understand. It's interesting. And it's funny to hear me say this, because I've had so many arguments with Eric Budish, who talks about auctions in liquid markets, where the problem with an auction, there are lots of problems with auctions in terms of securities that are part of derivative products, et cetera. But it turns out that single price auction sorts of models, which allow liquidity to coalesce and come together with better information, tend to be the most efficient means for less liquid securities. The proof of this, you don't have to look very hard. If you look at the percentage of average daily volume on illiquid securities that happen at the opening and closing auctions versus the rest of the day, it's dramatic how much higher percentage there is as securities get less liquid. And that's not for a surprise. It's because that's the one point in time where there's price discovery can happen with lots of orders interacting, because the less liquid a security is, the harder it is for orders to interact, because in time space, they miss each other, right? And so market makers solve this problem to some degree. Market makers that can aggregate flows together can sort of approximate that a little bit, but the less liquid you get, the less likely a market maker wants to get involved, unless they happen to have been the investment bank that took the company public, or are the bank, if it's a private market, that's planning to take the company public, and therefore they've done a lot of due diligence and they sort of have their own internalized idea of value. So in general, the illiquidity problem is best solved by focus of liquidity as much as possible, because it's sort of that magnifying glass that allows price discovery to happen. Because no matter what you do, orders have to interact with orders.
So I'm going to
So
follow.
go
Go
ahead.
ahead. No, go ahead, Chris.
Well, one thing I was just going to add in there, just from a mechanics perspective that I've found or seen in marketplaces that seems to be helpful in these rather illiquid markets, right? We're not going to one day wake up in the private market suddenly are incredibly liquid overnight. That's not going to happen. This is going to be a 5 to 15 year evolution that takes a long period of time. So in the middle, there's going to be incremental steps that we can take. And I think one of them that we can take, creating bid and ask markets where at least all the associated parties can kind of see where they're at, right? How far off am I? If there's 100 orders out there at $5 a share, and you want to sell them at $20 a share, now at least your expectations of what you think the price should be or what the market's willing to pay, that you're nowhere near getting liquidity based at the price that you're looking for. But if you're willing to come at $5.50 or $6, you might end up getting someone to actually purchase. And I think that will at least help with some level of efficiency, just because there's a bit of demand and supply side transparency around what pricing could be. And I think that's a really good way for illiquid markets, just to get a sense of, can I get liquidity somewhere in the range of where I'm at in terms of what I value this company at today.
So let's run with that a bit. I'm going to extend this back to you, David, as a follow-up. If you're creating some kind of market making or liquidity providing algorithm or model, what are the factors that you would need to be able to input in order to be able to get involved in this? And more particularly, would the research that is being provided, fundamental, technical, if there is available, would that actually help? Considering, a point that I've been making for a long time now is that one of the things about these markets is we often associate markets with the same type of method. And if you look at the public markets like New York Stock Exchange and NASDAQ and go back decades, the markets were not traders markets, they were investors markets. They've turned into traders markets, but the private markets might really be more on the investors markets world. And considering that that's the case where we don't have to trade in nanoseconds, is there something that a market maker / liquidity provider / algorithmic trader would need or can get from research providers in order to actually create a facility that would work for everybody, themselves as well as the marketplace?
I mean, my short answer would be no, but there's huge buts associated with that. So, because it depends on what you're talking about. So let's go back I would debate the trader versus investor market. I think that the biggest reason for there is zero commissions versus very expensive commissions, and that cause people to want to go in and out. I also think that we're very U.S. centric when we sit in the United States and we think about our markets. I can remember in the early 1990s touring Southeast Asia, and then the average broker, I don't care if you're in Bangkok or Kuala Lumpur or Singapore, they had amphitheaters where people, after having placed a trade in their local brokerage, could sit and watch the tape to see how their trades did. That's a trader's market. Korea to this day is one of the biggest traders markets out there with everything they do. So it's really, those sorts of labels trouble me because I'm not sure that it matters. Every market has both traders and investors. There's always a combination. Now that being said, quantitative market making has real trouble with the liquid securities, but the one thing that is a common thread is correlation analysis. So, for example, to get back to something I think William was talking about before, the single most important thing for market makers is to understand the industry and the pattern and what they're dealing with. So being able to categorize illiquid securities well is very important. So if you're dealing with, if you know something is a REIT and you know it operates in the southeast of the United States, yeah, you know, the research that talks about one market is one thing, but understanding that you can actually see what's happening in more liquid REITs in the southeastern United States is probably more important than anything else that you're looking at. And the same is true whether you're talking about, you know, SaaS companies that are based in, you know, wherever, in whatever vertical it's in. So correlation is extremely important when you're doing market making. You tend to want to be able to hedge versus certain instances, to whether you're pharma French factors like size or using the Russell, or industry related factors, or exposure to interest rate factors, etc. Fundamental analysis to allow you to know what the interest rate sensitivity of a company is extremely important, right? Companies that have a heavy debt load are going to have a seriously higher reaction to changes in the long bond than companies that have no debt load, and vice versa. So market makers do consume research in order to inform those sorts of decisions. But that being said, most market making really works on the basis of where liquidity could be and whether or not how they can hold the position. If it's a borrow that's hard to borrow, that makes a very big difference, right? If you have to be short it. If you're long it, your balance sheet and your use of capital matters. So it really is a complicated question. From a market maker perspective, and market makers, you know, that are solving for hours or single digit days of kind of mismatches in demand, that's a very different question than market makers that are solving for many months differential in demand. Those are very different questions as well. So it really depends on all of those factors.
So from a price discovery perspective, we're looking at things that are in a marketplace that's certainly less real time than in liquid markets. And I guess the question is, well, the first question before we even get to the how-to is, can there really be real-time price discovery in these kind of markets? There might be some price discovery and research to give you a ballpark to what Chris was saying earlier of where it would be, but can there actually be any kind of real-time price discovery, or should we move on and say, let's just figure out how to get to a form of price discovery rather than requiring it to be real-time? Anyone can take a shot at that.
I mean, the only thing I would say there is real-time matters relative to what you're measuring it to. So I'll give two examples. If you're talking about valuation of a business that is, we'll call it a utility, you know, the things that are changing in the marketplace is well documented. There are ETFs, there's markets, et cetera. There's bonds that are changing, but they don't change that much. If you're talking about an illiquid security that's trading Bitcoin, well, it's pretty clear, or cryptocurrencies, for example, it's pretty clear that real time is going to matter a lot, because those markets themselves, the underlying markets that are going to be related to the company, are moving very fast in one direction or another. And I picked two extremes for a reason. Most things fall to where, forget nanoseconds, most things fall to where minutes may not really matter if it's an illiquid security. It's just a question of getting the data and understanding it. But there are illiquid securities that are trading in markets like private companies. Let's say you have a private Bitcoin miner. I guarantee you, if Bitcoin drops 10%, that Bitcoin miner's private valuation is going to change rather dramatically. On the other hand, most are not like that. So it's just worth keeping that in mind. There are observable real-time data points that can matter, but most of the time in private markets, that's not really the issue, because you really should be looking a year, 2 year, 3 year, 5 years out. And most of the short-term factors don't matter then.
So then we're gonna, sorry, go ahead, Bill.
I'm thinking that I think real time is a goal. I don't think it's necessarily achievable in the near term, in the next 2 to 3 years, 2 to 5 years, let's say. I'm just thinking that, you know, as we deal with liquid markets, plenty of places in the world. Private equity is one of them, when we're trading private equity deals between companies, and that they come in frequently, and they're you know, the information for me is that I'm more concerned about the level of information that's allowing me to determine what that valuation is. And I think that's one of the biggest critical issues that we have to get people interested in this market, is that we have to improve the level of efficiency or level of information that is provided by companies, that we can make these decisions, investment decisions along to what the true value is of this company.
Thanks for the segue. That's perfect. So what is it now we're looking and saying the key component part of the price discovery is going to be in what's available to us. And some of it is going to be hard data. Some of it will be management evaluations, et cetera. But what can issuers do to assure or to at least help in the liquidity of their own securities simply by providing enough information to folks like you to make sure that there's enough information that there can be some kind of ballpark again where we can determine what the price is?
Yeah, that's a good question. And I think there's a few things. So first off, as an issuer, if you're doing regulation crowdfunding, and eventually you're going to be in a secondary market of some sort, or if you're doing regulation A+ and you're going to be in some sort of secondary market, reality is there is a certain level of information that you have to provide. So in the CF world, you actually have to provide an annual report 180 days after you have a closing of a filing. And then from there on out, you're technically supposed to give an annual report unless you file a form that says you no longer want to continue to provide the annual report. I would encourage as much as possible that you do continue to provide that annual report. That level of transparency in the private markets is duly needed. And it's also the right thing to do as an issuer. And by the way, just because you go the first time and you raise a lot of capital from your investors online, if you don't continue to do a good job of taking care of them and letting them know what's going on with your business, if you come back around, they might not want to back you again. So being a good issuer, being a good kind of individual in this new community, I think it's really important that you continue to provide that, because then you can get a sense of what their revenue growth looks like, and if anything's really materially changed with the business, and if you have new owners, all that type of stuff, investors can actually get that information. Now in the A+ world, it's actually a whole different ballgame. You're required legally every 6 months, you're providing an update on your financials and things of that nature. So because of that, as an investor, you can go to those documents and you can look at what their revenue growth looks like, what their cost basis looks like, what their balance sheet looks like. And that can really help you think about where are they today, where do they need to go in order to get to the next valuation or whatever that may be. But all of that information, I mean, it's a lot like being a public company. You now actually have real data that you can work with. So I do think that's very helpful as a just market research or company research before you decide to buy or sell something on a secondary market. The other thing that I wanted to mention, I think there is a real opportunity. Listen, not every security in this space is going to trade and be very liquid, even 10 years down the road. There's going to be a lot of very thinly traded companies, but we're probably going to get to a world where there's an index of 50 or 100 companies that are relatively actively trading. I know Shares Post, even for the late stage secondary markets, had the Shares Post 100. It's basically like the 100 most actively traded late stage secondaries out there. So I think we'll also have access to things of that nature, indices, where we look at the most actively traded, and that gives us a sense of what companies are trading at for those that at least have enough volume where it's meaningful.
So I want to get to another point based on what you said. We're looking at it from the issuer's perspective. These are the things that would be very beneficial to make sure that the marketplace accepts their securities and some of the pricing of it. But let's flip that coin and look at it from the investor's perspective. When the investor's looking at these companies, and like you said, Chris, he goes to some of the public sites and is able to get a lot of information. However, we know that there is some other information, like we said, management, that they don't have that's so readily available. How much emphasis should they be putting on the information they can gather on their own versus some of the information that they might be able to get from other parties who are professionally looking at these companies and evaluating them?
Yeah, it's a good question. Listen, we do need more professional research providers. It's something we're trying to do, but I think we need more companies doing it because that is very much needed. As an individual, when it comes to looking at management and things like that aren't necessarily in the report, doing simple things like going and doing a LinkedIn search and looking at who shows up as an employee and going through and seeing, have they added people to the management team? I know it sounds kind of tedious, but it's worthwhile to do because it is your money that you're deciding to invest or liquidate. So I think those are worthwhile things to do. And then again, as an issuer for the investor, you should be trying to provide, quarterly updates or monthly updates. I know that companies, that I've seen in the secondary markets that have traded well tend to be the ones that are providing updates, that are making moves to make their investors aware of what's going on with the business, and they're out there talking to investors. That's really, really important. And as an issuer, as an investor, I think it tells you a little something about the management team if you're not hearing from them. If you invested in them and you never get an update, that's a problem. So that's another thing in terms of evaluating the management team. I think that helps you think about the quality of the management team. Are they actually communicating with you, the investor, on a regular basis?
I agree with that comment wholeheartedly, that we need the level of information outside of an annual report that's reported, 3 or 4 months after the year ends, and it's so fragmented of information, it's hard to get really data out of it. We need more. Either it's the website that has a front facing that delivers the information through an IR model, or maybe there's another alternative, other sources of that the information comes from. I'm just thinking like an ATS that has sponsored these companies, that maybe they could, provide some level of information that's in addition to the what's being delivered. Or I see the companies that I've invested in already in CF, and I look at the level of information, and the websites are so rich with information about the markets, stuff and management is forward facing. It's really helpful to make a decision therefore on whether or not I would need to invest in or want to invest in this company.
So with that said, we're coming up with some other factors that aren't necessarily as tangible as some of the ones that you can get available in various websites, whether it's the companies or public websites, regulatory websites. A lot of these companies that are coming out today are, especially in Reg A and Reg CF, they have a fan base. And that's where they get a significant amount of investors initially, and probably interest even in the secondary market. And it's a fan base. They're just a movie company maybe has a fan base or something like that. How do you incorporate things like that seem to be a lot more intangible? Certainly are ones that would probably get lost in the shuffle if it were a large publicly traded stock, where that can have as great an impact, and we'll touch on that shortly, but can have as great an impact. How would the idea of a fan base holding that or stepping in when necessary impact what the value or the price discovery would be on any given security? Sean, you want to take us on that?
Yeah, I think that's a great point. When dealing with private investments, especially in the CF space, with retail investors, if somebody's going to put up with the illiquidity and the long-term nature of a private investment, it really helps if there's something you can have a fan base around. So that comes with having a very understandable business model that people can wrap their head around and understand why it works economically. And then also just knowing that there is a market of people that maybe they're not investors right now, but they're at least aware of the company, that can hopefully drive some liquidity later on when they hope to exit their investment in the future. Now, that being said, the more clear your business model is, the less you need a fan base, but the more clear your business model is, the more likely you are to have a fan base. So it's kind of tough for those people with more with less understandable business models, and that's when you really need great information from the management and the IR team, as well as maybe bringing in some sort of independent third party, or having your ATS provide some sort of additional information that doesn't seem to come from the issuer themselves, that can kind of give some independent credibility to the issuer.
Okay, look, so based on that fan base idea, let's maybe shake it up a little bit. So we have, recent events have shown a shift in how the market really values a company. It's, we had the GameStop and others, right? The AMC, GameStop, all these things that are showing that traditional methods of determining what the market should be looking at, forget about what the price should be, what the market should be looking at, seem to have upset the apple cart. So I'm going to start actually with David on this because he's the non-research guy here. And does this have an impact to say that research is changed forevermore?
I would say that there's a lot of crap research, and crap research is going to be crap and will always be crap. I mean, there are people out there that call Wall Street analysts dead fish for a reason. And frankly, what you find is that crap research, which is insisting upon keeping the same models and the same everything and not understanding or anticipating changes in business, is dumb. My friend Craig Kaplan, who's a PhD in the wisdom of crowds, basically from Carnegie Mellon, and he runs a company called Predict Wall Street for anyone who cares, will tell you that there's an enormous amount of value in crowd-based sentiments. What we saw in the GameStop situation, maybe in AMC, the jury's out. We saw in Hertz are situations where the crowd was right and Wall Street was wrong. And it's actually really interesting to me to look at the histrionics around GameStop. Oh my God, it went from $20 to $400. How stupid is this? Poor guys went out of business. Well, it's a lot closer to 400 now than it is to 20 in percentage terms. And the reason is because there are people on the internet that realize that GameStop had an enormously successfully established brand in the gaming community, but was dying because bricks and mortar gaming stores were becoming less and less relevant. So what if they leveraged their brand, pivoted to a digital model, and managed to turn it into a community? All of a sudden, what's it worth? It's actually the first example I can ever think of a company being able to implement a pivot, get financing without Wall Street help or private equity help. Instead, it was helped by a gang of people from Reddit. But the fact is they were right, and the people who have been yelling at them were wrong. And it's worth understanding that that can happen. And so it's not about research being changed. It's about where we live in the information age. There's no monopoly on research for someone sitting in a cubicles on the 5th floor of an investment bank. The reality is you need to understand that good ideas are good ideas. I mean, this goes back to the movie Working Girl. Remember that one with Melanie Griffith, where she kind of had this notion of how to combine a radio company with some, and why that would matter from an investment point of view. The fact is, there's no monopoly of good ideas on Wall Street. What happens in the information age is we get a lot of just enormous volume of ideas. Some of them are good, some of them are bad. If the world of social investing can actually sort that, it'll be good. The reality is there's, for every one case like GameStop where those people got it right, you have probably 100 cases where it's just real pump and dumping, and they're foisting bad information onto people who are gullible, who saw the one case that worked. So this is a really hard problem to solve if you're a regulator, if you really are trying to filter it. But I'll tell you what won't work. What won't work is saying you can't utilize information from the crowd, and you can't utilize information that comes from unlikely sources. So that's really kind of the point. The point is it's not an obvious thing, and regulation is way harder today than it used to be.
So how do research players actually use that data, or how would you guys take that data and inculcate it into your overall assessment?
Well, I think one thing is that's really interesting, and that I think researchers need to begin to include in their work is the bullish bearish sentiment, not just of Wall Street banks, but I mean, especially in this world, right? It comes down to individuals are really driving the market at this point for early stage investments in CF and A+. And there is something to be said for how many investors partake in that round. I remember there was one company I won't mention their name, but they're probably one of the most successful Reg A plus raised companies out there. And I think they've raised over $50 million from like 20,000 plus investors over the past 4 or 5 years. And they've gotten a lot of, or they've been given a hard time by more traditional PE/VC firms saying like, how can you value yourself at X valuation? They say, listen, every time we value ourselves higher, we sell out our round and we add thousands of new investors, and they believe in what we're building and we're making progress and they're buying into that progress. So we are worth what the market's willing to say we're worth. And if we can sell out a round, then that's a, an inclination that we're onto something. And I do think, we see the numbers all the time because we're always collecting that type of data on how many investors are partaking in a round. Not surprisingly, a lot of the rounds that sell out fastest and go on to have other future successful rounds are ones that have thousands of investors, not 50 or 100 investors. And if we think about how secondary markets work, well, the more players that are involved, right, the more supply side there is, the more chatter there is because more people are just generally involved. It's probably going to lead to them having better price discovery, more movement in the markets, et cetera, just because there's way more people involved in it than the company that has 32 people invested $200,000 and none of them are creating the type of chatter that 30,000 people could create. So I definitely think there's an important part of this market that you need to pay attention to how many investors are partaking. And it at least gives you a sentiment of what is the general retail investor market thing, which is clearly becoming a more important part of thinking through any stock investing.
I think, if I may, sentiment is easily measured. I mean, we've seen a lot of sentiment indicators in the market. We've used them a lot in the past. They're not uncommon to many investors in the market. The issue is that the sentiment can be measured now. You can go to how many website visits do you see, or how many comments do you hear on GameStop, on Twitter or other social media sites, and actually measure the sentiment indications. You can look at the word dynamics that are going on social media. You can get the measurement of sentiment very easily now, real time. And frankly, you can trade on it. I have students trading on GameStop. Anytime it shows up, they go in and buy GameStop, and then they'll get a 2 or 3% pop, and they'll leave. And it works. The trading model works for sentiment analysis using data that comes off of Google or any other social media site.
So is there a way? Sorry.
Oh, sorry. Yeah, I was just going to piggyback off of that, and that Bill's right. That's great for trading. All these Reddit aggregators that kind of count the sentiment of each mention of a certain company or cryptocurrency or things like that. Now, for investing, I think sentiment has to be a little bit more qualitative. So just kind of looking at the types of fans or investors that you'd see. So with something like Tesla, maybe the growth assumptions and the end goal that they're projecting is kind of hard to wrap your head around. But if you can truly understand the business model, then it's easier to kind of sit on your hands and wait. And then on top of that, the more you see a large crowd of investors that you think are just as excited as you and the business model and what they have going, the more liquidity you can kind of predict will fall in line to buy any sort of dip or fall in price. And just based on that, I mean, if you're thinking of a discount rate as like a required return, your required return's a lot lower if you are perfectly comfortable just sitting on your hands and riding the narrative and being able to tell your friends like, hey, I'm a big GameStop holder, or I just invested in Robinhood, even though they're private. It just, the sentiment really matters. And it, from a long-term investor perspective, it has to be a little bit more qualitative. So it's tough to measure, but
I agree with that as well. I just do, but sentiment can be, if we're talking about matching fan base, and we have a fan base of a company, that basically gives us a pretty good idea who's most likely that we can drive to our website to hit the button that says invest now. And that would be
so
one, go ahead.
Yeah, so maybe you don't aggregate like mentions on tweets, but maybe you look at followers of a company.
Yeah.
So like you see the following. So it's, there's
I mean, in digital assets and crypto, this is they call the word they use is community, but it's the same thing.
Is there a way to actually utilize that kind of information, not just for an investor, but for someone who's actually putting that into an algorithm or some kind of market making model, so that they'd feel more comfortable, particularly in a security that has a fan base, to make sure that they're not run over by some event because of whatever issues are going on in the public sector?
I personally think that yes, I think most market makers tend to want to stay away from companies with large fan bases unless they have flows for that exact reason. But the reality is that, you know, disclosures and transparency among number of followers, holders, you know, et cetera, you know, communities is extremely important for people to understand. I mean, the funniest case, the word that gets used a lot on Twitter is the army. So the first one was the XRP army. We've all heard about that one, and you know, their legal case notwithstanding, I mean, it's still out there. Try going out on Twitter and criticizing XRP and expecting to have civil discourse the rest of the day. It won't happen. But you know, after Elon Musk tweeted about Dogecoin, the Doge army started to rise, and you know, you have all this other stuff. I mean, look, at the end of the day, one could make there is a certain thing about perception can become reality, so it's hard to just be dismissive completely. But the reality is there's a reason that people today have a job title called influencer, right? That's all you have to say. You know, if you have a lot of followers, that can be monetized. It can be monetized in, you know, hawking products, or it could be monetized in, you know, the value of a company. I mean, to me, it's 6 of one, half dozen of the other. At the end of the day, there is value. People value crowds. People want to feel that they're doing what other people are doing. And so you're right, but and look, when I was at Market, and I know Chris Hammond, who runs the IHS Market, you know, Research Signals division, I mean, looking at this sort of stuff to create algorithms for investors is part of what they do for a living. I mean, there are definitely groups of people out there doing exactly that. I think market making is a little bit too short term for that, but I agree with what Bill was saying. I think that you can build trading models on a lot of these things, and you can build them for the long term as well as the short term.
Just to kind of piggyback on that, on quantifying the crowd effect, those like the XRP army and things like that. For instance, with Bitcoin and all those laser eye guys on Twitter and everything, you can actually look at the supply of Bitcoin, and at least as of a few months ago, you could tell that like something like 50 to 70% of the entire outstanding Bitcoin supply hadn't been transacted in over a year. So that means that that your long-term fans and followers are long-term holders as well. So the float, I guess you'd call it, is a lot smaller. So the price movements can be a lot larger to the upside, especially if you just have a certain supply of the asset that just will not sell. And in fact, will come up and scoop up even more on a dip. So you can build that into a quantitative model, just kind of basing, even in the worst of conditions, what percentage of the outstanding supply of shares, tokens, what have you, can you expect to just remain in the hands of who has it? And maybe what percentage of those people are going to add even more and close the gap there. So you can kind of weigh that into a pricing model. It's pretty subjective as far as your assumptions go, but it's a good place to start for a baseline.
It seems then that it's very possible that, particularly in the private securities, when there will be some that have a rather large fan base and others that don't, that are just companies coming out because they like traditional companies need to raise capital. They're good companies. They have maybe great numbers, but they don't have a fan base. It's not necessarily that one is a better investment than the other, but at least am I right in assuming that the analysis that would go into the evaluation and the price discovery of whatever the purchase should be, either primary market or secondary market, will be different, simply because that is an important enough factor to change in today's world, to change what that value.
I would like to present to back that up, 2 words: Elon Musk. If there's anybody who thinks Tesla's stock price doesn't change, let's say if Elon Musk came on TV tomorrow and said he's stepping down from Tesla, will have nothing to do with Tesla, but he's confident that those cash flow models that all exist today will be the same, what happens to the stock price? That's all you got to know. There are plenty of assets where the story matters more than the quantitative or fundamental models, and that's just reality. So what you just said is not just true, but frankly axiomatic, which is to say there's just literally no argument to the other side of it. Now, that said, it's always a question of degree, but it is worth knowing. The other example is art. So we have this whole NFT thing, Beeple and blah, blah, blah. But the fact of the matter is art, which is being put on the blockchain and sold, and, sports stars, all of this stuff, they're all stories, right? So companies are different because companies theoretically have real rates of return, cash flows, et cetera, and the market should be a discounting mechanism. But don't underestimate stories and the way people value things.
Oh yeah.
And
Just to that point, what we were talking about before, I think at the beginning I mentioned you have just price discovery based on, what is the market willing to pay, and then you have the fundamentals. And I think in this immature market, another thing that we mentioned earlier was this idea of almost having an index, right, of the most traded, the 100 most traded private companies coming out. If you have something like that, it's most assuredly going to be the ones with the largest bases, where there's just enough supply being created, enough demand being created, enough chatter being created to drive the markets forward and actually have movement. And for those more thinly traded stocks, the reality is there's not enough movement to really make it liquid with so few people involved in the company. If there's only 30 people, then you need at least 10 or 20 of those willing to sell every day to create any sort of movement. And so there's just going to be a lot less there. And but I also think that you kind of need both sides of the coin. You need what the market's telling you, and that has to be there. The other part is there does need to be market research. Market makers won't come into this space if it's solely just based on a bunch of people being involved. They also want to know, do the fundamentals at all support this? Just in the way that market makers have worked to date, they're going to want research layered on top of the companies where they see real movement. And I think you'll need both pieces of the pie.
That sounds like if there's a system that actually would be able to incorporate those things together. So bringing in some of the liquidity providers, I'm not even going to call them market makers, that has its own connotations, but if there are liquidity providers that are coming in, and we can combine that with research, it could be what I'm going to term traditional research, which is standard ways you do research, but then adding a layer on top of that that's quite unique for these types of securities that might have some real fan base models, et cetera, and somehow incorporate that, not necessarily to deliver a new research, but just to be able to deliver that to investors so that they can see all of the component parts. Now we can start to create what looks like a marketplace where I can understand my price as an investor. At least I can understand the factors that go into the price. And if we can systemize all that together, we probably have ourselves a solution. For secondary.
Sounds right to me. Absolutely.
So with that said, we now are looking at 2021. Companies like Rialto are building those types of solutions in some manner, shape, or form. But we have all the things going on in the world of, before I get to the question of where we see the markets going from a research perspective over the next few years, the question I really want to ask is the advent of digital securities and blockchain-based securities now has a different level, perhaps, of transparency and visibility into some historicals and into some events. and it's capturable a little more than it was before. Is there some difference in the way we would go about dealing with digital marketplaces, and not just digital securities, but the fact that the investments might be through a currency that is not a traditional currency, right? If there's an investment in those digital securities with cryptocurrency, would that impact things because maybe there's some volatility of those buyers? How does the digital world potentially impact what price discovery and research might look like for these types of securities? Throwing that out there, anyone want to take a shot?
I mean, honestly, it shouldn't. All I'll say is that the arbitrage mechanisms are pretty good, which is another way of saying that if company X is priced in Bitcoin, Ether, dollars, yen, euro, it's highly unlikely that it's going to deviate all that much. So the volatility of the Bitcoin or Ether won't matter. It's just the arbitrage will work. People will value it. So I think that the only thing that's different is if you are able to get to new investors to potentially who you couldn't. So adding euro to a US or adding US to a euro means you open up to new investors. And so perhaps there's more demand there, but there's no reason why the volatility of the currency should matter.
Yeah, and if anything, with these digital assets that are being tokenized into security tokens, it not only does it open up a new level of liquidity that is a big pitch to both primary and secondary investors. There's also you can reach across borders with it a lot easier since everything's kind of simplified. And then on top of that, you're just seeing a mass adoption of people just willing to jump into anything digital. I'm sure David can attest to that with his Miami whale pass in the background there. I'm sure there was lots of hype that kind of confirmed the amount of interest that's out there in Miami and the rest of the country. But and not just that, the main problem with digital assets will be the education gap that there is, and it's just getting these family offices and these guys that have been investing for 40 years to kind of ditch their unlisted REIT for a liquid tokenized REIT that will distribute their distributable cash flow on an exact date in a easily predictable and transparent way. Just the transparency of information, the liquidity. I mean, it's just a superior way to hold your securities. The only thing that makes private investors a little bit uncomfortable is the same thing that makes it a good thing, is that liquidity can create a lot more volatility than they're used to, because they're used to getting a quarterly update, and maybe they go to Aspen in the summer and hang out, and they don't have to worry about their investors calling them and be like, hey, why am I down 50%? So that's kind of a negative, but I think investment managers are just going to have to get over that and get used to having to stay more up to date with price movements. And the good ones will see it as David said, an arbitrage opportunity when something that kind of clearly has a determinable income stream drops to where you get some ridiculous yield, then that's an opportunity. So, I mean, I think it's all pluses all around. It's just going to be a long period of time where we're just going to have to educate more established investors.
Yeah, we talk about the education process all the time. It's just getting people to understand what it actually means. Just quickly, we're coming towards the end, so just a quick 30 seconds. Not going to ask where you think the market's going, because that's just predictive. But what's a different question? I'll phrase it. What's the one thing that issuers can do to help facilitate secondary trading for their securities? Start with you, Bill, if you have something.
Yeah, I think it's, I'm back on it again. It's information. Just, having an update, having a frequent update, or some level of investor update that they can give either through the website or through, YouTube videos or something that can help the flow of the information to help people understand what they're doing, what the opportunities are, and then I think the people will grab onto this. If they see the good information flow, feel more confident, that will build confidence in trading secondary shares.
Great. Sean?
Yeah, there's two major things. Disclosure, get as much information as you can out there in the market, whether it be through a really nice internal IR team that puts together quarterly presentations, or whether it be hiring an independent third party. And the other thing is just community engagement, just getting out there, knowing your customer, knowing your investor, and just having a constant collaboration between not just you and your customer, but your customers within themselves is just huge to building that kind of network and following and fan base that we've emphasized so much.
Thanks. David?
I mean, I think, not to beat a dead horse, but I think that Bill's right. I think it's really about information, and just in the modern age, it's not just research reports, right? It's engagement with users, it's engagement with customers, it's engagement with prospective customers, and with, it's really all about engagement. I mean, that's probably the single biggest thing that people can do. The flip side of that is thought leadership as well in your industry.
Yeah. Chris?
Yeah, the one thing I would add here is I think all founders need to start rethinking the way they think about equity. A lot of times they've almost used it as the golden handcuffs that keep your employees here, and you can't liquidate until there's an IPO or an exit, and there's no way to sell your stuff. This idea of basically having all of your investors locked up and never able to sell is just a really old school idea. And I don't think it's really a retention tool anymore. If anything, I think it should become a deterrent. And so I would just encourage founders to be willing to sell your shares on a secondary market, to put your company out there, and to recognize that if you're a good company, then it shouldn't be a worry. It should actually be an added benefit, both for employees and investors. So don't say no to selling your shares online, because in fact, it could end up being a really positive thing.
Well, thank you. Thank you all very much. Appreciate it. Right on time, I think. Thanks for your time. It was very insightful. And Oscar and team at KCX, thank you so much for all the help in putting this together. Have a great day, everyone.
Thank you. Have a great day.
Great panel. That was amazing. It's great to hear the advice by those who have been in the market for a long time, are able to analyze it and be able to bring good insight. I mean, you can imagine from me, I'm listening. This has got to be, for me, it's a very interesting event, because usually I'm right there with the crowd. But this time I've decided to kind of really dig in, and then it's really interesting because throughout the day we keep hearing all these recommendations for companies, and you can imagine for myself personally, and for CoreConnex, is that we knew that was coming, and it yes, there's a joy in my face because it's finally here. So it's finally people are talking about, what, it is good to communicate with the shareholders. And when you have lots of them, there's a way to approach it. So our next panel, I think, is just going to put a really interesting different spin to it. We got Elliot Chun, Managing Director at Emergent Wield & Co., someone who's been here before with us, and two other colleagues. This is going to be a discussion about CEOs. What's management thinking about when it comes to secondary market? Chris Lustrino just said it. Management needs to think about their equity in a different way, and that kind of just leads you into this discussion. So I leave it to Elliot and our panelists to continue that discussion. I'll see you guys soon.
Yeah, thanks, Oscar, and to the panelists before. Great to see familiar faces. The importance of information and engagement. Those are two really quality components that may be underestimated, particularly as we look at secondary markets and what that can mean across the board. As Oscar mentioned, my name is Elliot Chun. I lead Emergence at Wield & Co. Our team focuses on emerging technologies and climate tech, and we do very much investment banking like functions, capital raising, strategic M&A advisory, and business development. joined here, and it's a little bit of a flip. Usually Vincent Molinari is playing the role I'm playing as moderator, but today we have the pleasure of him being a panelist and a contributor. Vince, quick intro on your side.
Well, thanks, Elliot. It's a pleasure to be here. And thanks to Oscar, of course, and the entire KoreConnex team. And thanks to Danielle for tolerating all my emails leading up to this. But yeah, so great to be here. CEO, founder of FinTech TV, which we focus on two specific areas globally. The digital asset report, as you can see here, focused on everything that is the digital transformation, digital securities, tokenization, crypto, blockchain. And then our other show is The Impact, focused on everything that is related to climate change, ESG integration, the sustainable development goals of the UN. However, most of my professional career has really been focused around capital markets and particularly the last 15 years, transitioning to private securities from a world of historic public market work.
Excellent. And for those that have not seen Vincent and FinTech TV's work, highly recommend going and checking out their content. It's extremely high quality and insightful stuff, and very worth the time.
Especially the episode with you, Elliot.
Oh, come on. That was an early one too. We're also here joined by Julianne Phipps, who is the Chief Revenue Officer at KoreConnex. Julian, intro from your side, please.
Great. Thanks, Elliot. And it's such a pleasure to be joined by such esteemed colleagues as yourselves in the industry here. So I'm going to be, following your lead a lot and learning along the way and sharing some of my experiences and our experiences here at KoreConnex, providing by a lot of the work that we've been doing and learning also from the crowd. I mean, we've got some great insight here and from a sales perspective, but also from a technology side. Looking forward to sharing some insights on the secondary market.
Excellent. And let's jump right into it. I have to start because last week, Bitcoin Miami conference, I mean, wow, there was a lot of action and activity there, and it was great to see people in person. One thing, and I know, Vince, you and I have been in this space for a while. One thing that was great to see was the number of companies that have made it through this period and are still alive and are moving into their next phase of capital and how to access capital. And when they are making these considerations, why it's important to think and consider about access to secondary market. You are going through some of this experience yourself now. Can you talk a little bit about your thought process as you go through your current raises and how much the concept of secondary markets plays in your decision-making process?
Yeah, Elliot, I think it's interesting use case and case study for me being in the seat of the CEO of a company that is undertaking this versus historically have been on the broker-dealer, the ATSI, like yourself in many cases, raising the capital. So I think for us at FinTech TV, and I'll harken back a little bit to Chris's comment earlier, because I think it was so important for C-suite executives of private enterprises to think about their equity different. I think we continue to converge on a bit of that blurring of the lines between public and private securities, given their access or visibility to secondary liquidity, right? So I think that changes the paradigm and blurring the lines or other. So a very important tool, if we reverse engineer it, if we think about access to secondary liquidity, at least to be able to post for liquidity when you're raising capital on the front end. Because what do we always ask ourselves going into an investment? What's my exit strategy? What's my expectation of the exit? Is it an IPO that may be 7 years out or an uncertain period of time? Is it M&A? When we can look at a level of certainty, particularly with the utilization, like our friends at Rialto coming more and more prominent on access to secondary liquidity, whether that's Reg A plus or Reg D or other methodology, so very important. So for us, it really allowed us to engage with potential investors, I think most importantly, that ordinarily wouldn't be investors without secondary liquidity, but also to open up the spectrum where we think it is so important when you begin to lever and have shareholders that are consumers or users or participant in your company revenues and vice versa. So that kind of duality of customer acquisition and investor acquisition in one funnel, I think really becomes a great leverage point.
Yeah, an interesting comment along that, when we think about the term of a lockup, right? And that being one of the older restrictions that private market typically applied to their investors. And now really with the onset of secondary markets, the term lockup is now something that we're seeing pushback from because it really does not align an investor's interest to that of the company and the leadership of the company. Julian, when you think about the term lockup and you think about some of the clients that you are working with today, how are they viewing that in terms of, is it an education thing? Or now are they saying, hey, we get what this is, how do we go about doing it?
Yeah, that's a great question, Elliot. And I think some of what I'm seeing is a duality that's playing out. Some of the traditional or perhaps more, experienced, management, as well as different companies that have been raising funds, perhaps the VC route or, different funds, for example. Those ones, traditional, longer term investments, 3, 5, 10 years in length. I mean, for the purposes for those type of projects, raising large capital, that, needs that time horizon. But when we're looking at Reg A and we're looking at, the private equity market, a lot of these companies, while their efforts and the capital they're raising today is really being utilized in the near term. We're talking, several perhaps years down the road, right? But the investor, the mindset of the investor, I would say there's those that have been used to those traditional lockups and now getting into more, well, I prefer to have the option to have that liquidity with my investment. And more we're seeing here on the front lines that yes, management and different founding groups are looking for, okay, wrapping their heads around how do I create this investment structure that is going to complement both the desirable aspects of what the investor is looking for, but also provides the company with that runway and that security, I guess, in terms of the capital going forward.
Yeah, and just to reiterate here, we are speaking from the perspective of the issuers. And so, from that perspective, Vince, have you gotten pushback or from investors that are saying, hey, I love what FinTech TV is doing. I would like to invest, but, I'm not so sure about what's going on with secondary market here.
I think it's a little bit of what Julian has been referring to. And I think it's, we've been in this elongated education and awareness process from Jobs Act, right? What is this? You're getting one's head around private securities valuation, expansion, and growth that start to now mirror the public market valuations of companies. And I think we're now sitting here saying as an issuer, hey, let's rethink about this secondary liquidity sooner, not necessarily as handcuff. Liquidity as a tool and enhancement shouldn't be viewed as a negative, right? And also, Elliot, and I know you know this well coming from your side, this evolution with private companies putting forth information, right? It was always, a private company, I don't want to expose my information. I don't want to tell competitors what I'm doing, right? So that comfort. So I think it's been an education process across the board. So for me as an issuer, I think we have the great ability as we talk about things to point to Rialto and say to investors, hey, I don't know what it looks like. I don't know how much liquidity is going to be there in the beginning, but if we're right about what we're doing as we put more information forward, as we're transparent, as we grow and put disclosures out there. The likelihood that there's going to be some liquidity, even some liquidity, is like exponentially better than zero. Even the ability to post or bid wanted kind of thing. So I think we're getting less pushback from potential investors as we talk about potential pathways for liquidity.
Yeah, and one thing that we've kind of come up against is new structures like secondary market access for private companies, while beneficial to investors, doesn't necessarily fit their current investment processes, or it doesn't necessarily fit how they would view a private security in terms of how it operates. Again, previous panel talking about information out there and that affecting the price of what they believe is a private asset, and therefore it affects their valuation in real time. And some investors would push back and say, well, I don't look like my private book like that, and I don't necessarily want real-time marks. I would prefer my quarterlies. Julian, how do you answer those types of questions when you look and say, but investor, this is beneficial for you? This is something that should improve your processes.
Yeah, that is a great question as well. I mean, the thing that we try to allude to and I guess make aware for the investor and for also those that are considering this route is the investor themselves, is in this space, particularly with Reg A, is not always after simply the return on investment, right? So there's also a whole other sentiment and desire of why they're investing in a company at this sometimes earlier stage. And one of those things is sometimes it's the story. It's what the actual company is bringing to the market. They want to be part of that journey. So I think that's part of the answer that is being, is changing the traditional mindset of, while return on investment, it is important. This is another aspect of that kind of reason and raison d'etre, as they say, why that investor is investing in this company and an opportunity. Not only that, sometimes the fact that you can have perks and incentives in this market as well. Those can actually drive the investment. We're not always talking about huge dollars in terms of the investment. We're talking about increments that are Main Street friendly, let's say, right? So that alone is a different mentality set that creates the desire to invest in these companies.
Yep. Vince, as you went through this process, many issuers and executives of those issuing companies go through a option analysis of where can I go to access this capital? And in that process, there's multiple considerations, but the secondary market is certainly one to consider. How much did that play in your thought process as you were deciding which pockets of capital to access and in which form to access them?
I would say, Elliot, it was a considerable factor in our analysis, which starts with who are the best accretive investors to help build the organization. And perhaps if we had a different type of business, maybe it was a different analysis that we may say, hey, secondary market is less important because we're going to have one large strategic investor who's going to ride the 3 to 5 year period with us. For us, the analysis was very much as a global media company that has significant viewership to deepen the relationship and the connectivity to the viewer and make that viewer stickier, if you would, to the loyalty, the consumption of content of FinTech TV, and how better to do that to have them have an economic component, to have the possibility of being a stakeholder. So that was the consideration then to say, well, as we think, how do we enhance that? Because all investors may not have the ability to hold a security, particularly a private instrument, for 3 to 5 years. So the secondary market allowed us, I'd say, to have a broader target audience that allowed us to say, well, you may have a less than 3 to 5 year historic private equity type horizon. So if we can have a pathway, again, you open a bigger funnel. So I think that allowed us to have, a broader target investment audience globally.
Yeah, and that is one thing that is vital today, which is in private markets, as an issuer and a leader of a company, how can you further engage those to be aligned to the goals of the company succeeding? And previously, in private markets, you have friends and families, and then you have a couple of funds. Now you have the potential to take all the viewers of FinTech TV and turn them into investors and evangelists of FinTech TV. And by providing that secondary market, you are also allowing those that did not know about it yet, weren't around or aware of the company when you were raising your capital, but have had a very positive experience or are believers in what you're doing through word of mouth. It allows them to now participate, and it allows them, new consumers and who may also be new investors, to be a part of the mission and the goal. Julian, you had one comment you wanted to jump in on?
Yeah, and it's jumping on the idea of this larger, a broader investor base, right? We often, from a KoreConnect's perspective in this Regulation A space, are speaking with these, founders and companies that are trying to wrap their head around sometimes, what else do we need to make this Reg A successful? And, some of them come preloaded, with companies like, FinTech TV with a great, broad base of fans, for lack of a better term. And some of them, come without that, frankly. And we have to kind of position them in terms of wrapping their heads around how to work with different, IR, IA firms, investor acquisition, and the different marketing strategies that are going to reach out beyond the network that they have and they bring to the table. So I think the thing that's important to the success of, this space today is really how are companies, utilizing different strategies to amplify that message that there's a great opportunity here that we have in our company's offering. And so that's what I would add to that.
Yeah, I'm sorry.
No, go ahead, Vince.
No, I was, Julian was kind of went right where my next comment was going to be. So I fully appreciate that. And I know it's a cornerstone of everything that KoreConnect stands for, and so many of the summits. And I would say, as a practitioner, as an issuer, this team approach. So I know this is a conversation about secondary liquidity, but having eToro as a community participant on the front end of our raise, for example, and perhaps a WeFunder on CF and a Rialto on secondary, and you go to the marketing and then say, okay, what other community members KoreConnect is doing X? So I think that cannot be understated, particularly in this education awareness evolutionary stage that we are in private securities, whether that's secondary liquidity or the issuance side. I think that team approach is so important. So I just wanted to emphasize that from a practitioner standpoint these days.
Yeah, and it's one of the few things that any leader of an organization, when you're able to combine efforts and be able to get multiple outcomes from an initiative, you have to take a look at that. And specifically, we're talking about what Julian and Vince are talking about here, which is you are either marketing and taking a consumer of your product and then turning them into an investor, or on the flip side, you can take investors and turn them into consumers of your product. There aren't many things that you can do in any facet of a business that allow you to get two different incomes that are, quite frankly, the most important things to the business. You got to have customers and you got to have investors in your company. So when we think about where we are here in 2021, and we think about the tools that are being built across this new infrastructure, KoreConnects obviously being a key one, where do we see us going? What are the topics that we're talking about when we're sitting here a year from now? Vince, if you want to start.
Look, if I had to dust off the crystal ball, we had this hypothesis, and again, I think Oscar said it politely about Dave Weisberger earlier being full of wisdom. I think he called him a little bit old there, but maybe that was just my interpretation. But some of us who've been through these cycles in the early days of the Jobs Act, right? What we hypothesized on could be true. Started with visibility, awareness, and that education. And as now we see the increased issuance dramatically occurring year over year in private unregistered securities, the changes to Reg A, the increases in CF. So I think when we look at this 12 months from now, the conversation is much more about not, is this a pathway to allocate assets from one's portfolio that may be uncorrelated to the public markets, as we talk about in the category of alts on the issuance side, but really the advent and the coming of age of the secondary marketplace, and really understanding the power of secondary liquidity of private unregistered instruments and the role that alternative trading systems will continue to play and expand in importance in that marketplace. So I think that's the conversation, 12 months from now, and that greater recognition of secondary liquidity.
Julian?
That was very well said. I think the only part that I would add to this is, as the, evolution in the space and the way these different offerings are structured, the investments themselves, the underlying technology here is blockchain. That is one of the keys to really connecting the primary, the information of that initial investment flowing through to, the management of that security. And then obviously, as we're talking today, to the secondary market. What that allows for is really these investment structures to take on new attributes and characteristics. We talked earlier in different sessions about, the digital, security. Where is this going to take, companies in terms of the different abilities that it has to offer, perhaps stable coin, into a virtual environment, something that, we're already seeing, in different online communities, right? So that's kind of dusting off the old crystal ball, as Vincent said. This is where some of this discussion can evolve to. But not only that, the secondary markets will be an important feature in this, in terms of the ability to essentially create those markets to quickly transition and I guess trade these securities and all their complexities that go along with it.
Yeah, I'm really excited to see the infrastructure that is maturing before our eyes, even with KoreConnects, with the Rialto, with the King's Crowd, with the Coin Routes, all the other groups that are in the ecosystem here. While we are in kind of early days, where the velocity of the maturation of these products is fascinating, and that is what I think is really going to allow for a robust market and a robust ability for those to access markets in an accountable way, and that's going to be vital as we start coming here to the end of our panel. Vince, you're in the middle of it right now, and from an issuer, from a CEO, founder, of an issuer going through this process in real time, what is some of the advice that you have for those that are watching here now and are considering what to do and how they should do it? Any tidbits that you can help give?
plenty of Wheaties. Whatever you thought the timeline was, probably double or treble it. Whatever you thought your threshold for pain was, increase that exponentially. So that's not being negative. I think it's just partially being, hey, the best laid plans to an executable path have so many uncontrollable variants. Again, whether that's an audit or a review, and oh my gosh, we didn't plan on this because, oh, it's year end or it's quarterly, and every CPA is getting out XYZ, so they can't pay attention to us for another 60 days. Wow, we didn't factor that one in, right? So I think it's trying to really crystallize the plan as much as possible, but be prepared for pivots, be prepared for the curveballs. And I think it is really, I think the biggest thing that I could say is nobody's getting it done on their own, right? And it goes back to that collaboration. I think it's, unmasking ourselves a little bit and to say, hey, need some help here. And who you may think is a competitor may be a collaborator, someone that you can cooperate with, particularly when we're all working together to build a new sector in its space. So I think the level of collaboration to be open to, and really putting forth that team effort, and just be prepared for some pain points that you didn't foresee.
The pain will always be there, but the collaboration in the space, particularly in these areas, everyone that's been speaking on these panels today and on previous core summits, they are the most approachable people I've ever been a part of. It's very easy to reach out, ask for advice, have a conversation, get market intel, get market perspectives in order to help you through your processes. So I encourage all listening to be proactive, reach out, and good luck with your doing. With that, Julianne and Vincent, always a pleasure to be with both of you, and we hope everyone enjoyed our panel today. Oscar, we're throwing it back to you, buddy.
Thank you, guys. That was great, and I like the way it was finished off by Vincent there, indicating that is true. We are just starting to grow an ecosystem. There's no such thing as competition. We're just getting to know. There's no sense in hoarding information or anything. At the moment, we need to share, because if one success leads to another success. So that's always been our philosophy, working with everyone and bringing everyone together so we can educate the market, so they can see the experience and the positiveness that this brings to the market. So thank you, Elliot, Vincent, and Julian. I really appreciate that you guys taking the time. So this next panel, ladies and gentlemen, it's what we have been waiting for. This is something that, for me, 3 years of my life have been all about. I've been promoting secondary market for a long time. You've probably heard me in many different core summits or other events. I felt that it's the game changer. It is what really fundamentally will change the private markets. And, I learned a lot along the way. And I hope that journey that you went through today, it took me years to go through. The different types of ATSs, that's right. There are different types, the different models, and they, depending on the regulation, so an ATS or secondary market, it's not vanilla. It's lots of different flavors, and you need to ask all the right questions. And it wasn't done there. Now you needed to make sure that you filed your proper documentation for Blue Sky and National Securities Matter. It's been amazing. But that was just one part of the equation. The next part was bringing everyone together. And that took a combination of bringing companies like CrowdCheck Compliance with their expertise, and them looking forward and saying, we need to solve this problem for the industry. And then, of course, making sure that we have a registered ATS by Rialto Markets that solves the problem for those Reg CFs and Reg As and Reg Ds with the individual investors, not just the 1%, the everyday people, the 2.5 million people that participate in Reg A and Reg CF all these years. You now have a venue. It's here. And this panel is going to be led by Sherry Noonan, the co-founder and CEO of Rialto Markets, and it's going to kick it off so you guys can experience it firsthand, what it is end-to-end, Reg A, Reg CF, or Reg D, all in one, primary and secondary. You're going to get to see it. I leave it to you, Sherry.
Thanks so much, Oscar. I'm so excited to kick this off. So good afternoon, everyone. We have been talking today about all things secondary markets, and I hope it's been really helpful in understanding the landscape of the complexities, the nuances, the considerations of this marketplace. But nothing really drives understanding like seeing. So today we really can't wait to get up close and personal with an end-to-end demonstration from capital formation all the way through to monetization. So we're going to start with the process of investing in a security, then move through to an investor viewing their shares on CoreConnex and launch into the Rialto trading system. From there, we're going to explore the information available on Rialto and how investors can submit orders. We're going to conclude with how transfers are affected with CoreConnex and discuss the use of blockchain technology in the process. As we've discussed this afternoon, we really do believe secondary market trading provides the infrastructure that allows private markets to scale in ways that has not yet occurred in the public sphere. And so we're so very excited. But first, as always, we have to start with the lawyers. Andrew Stevenson from CrowdCheck will discuss TradeCheck and why blue sky doesn't end with primary issuance. I know that can sometimes be confusing. So Andrew, I'm going to turn it over to you and you can discuss more.
Great, thanks, Sharon. Yeah, so the so it's unfortunately it's not just sign up for with CoreConnex and Rialto and Go. Their state laws are still impact the ability of investors to buy and sell shares on the secondary market. With the exemptions that are available as a result of the Jobs Act, so Regulation Crowdfunding, Regulation A, preempt state laws on that initial issuance, but they're still there and they're still lurking in the background when it comes to secondary trading. In the most recent rules from the SEC that made some tweaks and changes to Reg CF and Reg A, they identified that while they got comments about maybe creating some sort of preemption for state laws as well, they were not going to do it at that time. It's a subject that they need to really kind of dig into on its own rather than part as a larger rulemaking package. And some of that pushback is coming from the states. They still think that they have a very important role in investor protection. And that's the way that a lot of the state laws are written. They're kind of written for kind of old world of not having available information through platforms like CoreConnex and ATSs like Rialto's, where it's that the only source of information would be whatever a company actually that puts on file with the state government. And that's the way a lot of the rules are still written. And so that's why we've integrated the trade check process into with CoreConnex and Rialto to make sure that every issuer is covering their bases on the state laws, so that way they're not going to get bit later when they do make themselves available for trading. The trade check is covering so at every this trade check should make sure that the shares are available for exemptions for trading under state law. Most states will follow what's called the Securities Manual exemption. And again, this is based on the idea that there's just not enough public information out there. So we need to make sure, so states want to make sure that there is public information available in a recognized securities manual. And securities manuals used to be much more important, where actually that is where sort of market makers and investors would actually go to look up information on the financial summaries, business model, management, how many outstanding shares, and how many shareholders of any particular company. But now that's not so relevant, but it's still out there as a vehicle for complying with state blue sky laws. Some states then do have additional layers on top of it that the company must have been in operations for 2 years or 3 years, have gross assets of $2 million. So they kind of imposing a little bit of a merit role on top of just being in a securities manual, and so that's the kind of thing that we'll also identify in the trade check. Then there's there are some kind of unique states that sort of that want to make sure that that don't have the manual exemption, that sort of say, okay, you're good to trade so long as their transactions are isolated. And so for that's an important reason of using an ATS like Rialto, who can keep in KoreConnect, where they can keep track of how many trades a holder is making, so they don't go overboard and potentially impact the availability of the isolated non-issuer exemption. And then on the other extreme is a state like California, which does not have any sort of exemption, and actually requires registration, which seems strange, but they do require registration even by selling security holders. Fortunately, they do make it available for the company to sort of register on behalf of selling security holders. So the company prepares an application, prepares all the disclosures that are required, sort of signs service of process, process forms, sort of affirms the accuracy of the application, and then it goes through a review process. And this is this is kind of new in the space. In California, while this law has been on California's books for a long time, they haven't seen many companies do this, because what KoreConnect and Rialto are doing is unique. It's kind of creating this whole ecosystem and making it available hasn't been done. A lot of companies just don't bother with California, don't bother with making their private securities available for trading. And so typically for California, the only shares they see are ones that are on national securities exchanges, and so are exempt from the California rules. So with our process in the trade check, we help get through California as well. Once everything is all wrapped up, we'll provide sort of a report that identifies the availability of the exemptions, the dates for the exemptions, and when expirations or renewals are required. And that's the kind of information that can be maintained by the company and be to provide assurance that it is doing everything it needs to do and doing everything correctly in order to have its shares tradable on Rialto and KoreConnect.
Great. Thank you so much, Andrew. Every time I hear about trade check, I just think back to Hamilton and a nation of states. But anyway, so thank you, Andrew. So it's also at this stage that issuers will sign the Rialto Markets ATS placement agreement, and the process of Rialto vetting the issuer and placing them on the ATS will begin. The issuer will need to go through anti-money laundering and know your customer reviews, of course, unless they've already been onboarded by Rialto. Once they've been onboarded, the issuer will receive the ATS rulebook. Now, the ATS rulebook details the rules of interaction on the Rialto ATS to ensure fair and equitable treatment on the platform. Now, Julian is going to take us through how an issuer launches a primary issuance and how the investor originally invest in that primary issuance. So Julian, over to you.
Great, thanks, Sherry. Really appreciate it. And while I didn't prepare a Hamilton rendition of this demonstration, I hope not only you'll enjoy it, but we've got something really exciting here for the webinar folks on the line. And it's all about being able to take it from the primary offering, as you mentioned, managing those shares throughout in those securities throughout their lifespan, all the way through to the secondary market today. So without further ado, let's begin. Here, we're very, very thankful today to have the permission from City Zenith to actually demonstrate live their live offering here. It's a Reg A $15 million fully qualified and fully live raise. And here on their page, you're able to see below at the bottom some of the details, best practices on the page, where they'll have investment details, not only how many are in the raise already, but also the price per share and all the vitals related to this particular investment. So once again, thanks to City Zenith. Now, we begin the journey with the investor clicking on the Invest Now button and entering how much they'd like to invest. And so this begins our forms that we have to fill out here online, everything done in real time. So we're filling in the first name, last name, email address, and all the pertinent details for the KYC, the Know Your Client, and anti-money laundering regulations. And now we're going to select as the individual how they'd like to invest. So they can be an individual, they can be joint in tenants with people in common, or they can also sign up as a company or corporation or trust. So the form will adapt to the actual fields that need to be registered. And all of this is in order to actually perform the broker-dealer compliance review, of course, of the suitability of this investment. So next we have an age gate here, and what that allows is no one under the age of 18 can invest. So if you're born on the 10th, sorry, you'll have to wait till tomorrow. Today you're able to invest, and following that we'll put in the social security number as one of the IDs, followed by a government issued driver's license or passport. So those are things that we need to fill out as the investor, allowing for all these fully compliant investment to occur. Next, we continue on to the next step once the ID has been inputted. And here we have the suitability questions. So this is where the investor themselves declare if they're accredited or a non-accredited investor. And if they're non-accredited, what they'll be able to do is read the definition there and enter their annual income. And their annual income will be followed by the net worth. And that calculation of 10% of this is what allows them to invest up to 10% of their net worth. So here we realize that they can invest $21,000 in addition to what they've invested, and that could be adjusted on the fly at the top of this form. So they can actually add more dollars to this investment if they so choose. Now for the funding information, we have a number of different payment mechanisms and options ready for you. So we have ACH, we have wire transfer, we also have credit cards and mail-in check. And the last one not mentioned here is crypto to fiat or US dollar. So all of those are available for you today. And with your live offering, you're able to apply any one of those. Now, this is something that is really a breakthrough that hasn't been done to our knowledge before. We are one of the first to do it. It is a tap and go IRA, so an individual retirement account. And it's done through New Direction Trust. This is one of the custodians for the ability to open up one of these IRA accounts on the fly. So there we have it, but you can select yes or no, and that allows you to create that particular investment. Now is the all-important part where we sign the electronic documents. Starting with the broker-dealer custom agreement, you scroll through all of the terms and conditions, acknowledge that you've read it and reviewed it, and the same thing goes for the subscription agreement, which is done by the issuer, you, the company. So at that point, the investor selects all of these check marks, certifies that the information is true, and signs that exactly how they entered their name in the first place. And that is as easy as it gets. The investment is confirmed, and at this point, two things happen. The first one is the broker-dealer, Rialto in this case, their chief compliance officer will get an email saying that an investor is pending review. And now they're able to log into the CoreConnect's backend and log into their compliance portfolio here and be able to perform all of the compliance and suitability checks. So starting with all the information that was entered on behalf of the investor, they're able to view all the real-time information that was entered, followed by the investment suitability, how they answer those questions, and the investment details themselves, and moving on to the KYC AML. So here's where an actual third-party report will be provided, and it's already integrated here. The broker-dealer will review that, make sure they're not on any sanctions list or anything, and there's three things that can happen. They can approve them, they can decline them, or they can ask for more information if there's some sort of flag or need for more information at that point. So then at this point, the investor now, once you've approved this, is then invited back into the platform from the City Zenith website. Now, this is the important distinction here, is that they don't have to go to CoreConnect. They are still on the City Zenith website, and they can log in through the private label login for investors. And when they log in, they're immediately greeted by this very clean, private labeled experience for they can see their personal dashboard in terms of all their investments. They'll see their holdings, the sectors they've invested in, and which regulation was used. Below that are the pending investments. Now, this is a crucial part. This is where you as the investor have made the application to invest. Now, it could be pending compliance review, and it could be also be pending a payment in terms of receiving the payment and verifying that it's been received. So all of this is done through the compliance of the broker-dealer Rialto. And once those statuses are changed, that enables then the investment to be fully invested. And then the investor can view into their portfolio and now click into the City Zenith. They may have invested in other companies here, but if we click into the City Zenith here, they're able to see and drill into all of the different investments they may have made. They might have done a few of them, but if we look at one of them here, they'll be able to have all the details that are associated with that particular investment. So you'll get to see the price per share, the amount, quantity, and essentially if they have voting rights or not, any perks associated with them. And all of this is stored on the chain. So the two things that the investor really looks for always is the subscription agreement as well as the digital e-certificate. And those are viewable at any time. They all live on the chain as mentioned before, and they come with a unique ID. And you'll hear more about this chain and how our technology is built on the blockchain infrastructure. But this is very important because it allows this primary investment to then be able to access the secondary markets. And with that trade button right here, this is how the investor at any time essentially can can connect to the secondary market. So if we click on that, a lot of information is already pre-populated. They simply enter their name and a few of the fields that are required, and then they're able to review the Rialto ATS subscriber agreement. And once they're done reviewing all of that, they click OK, and then they're brought over to the secondary market. So that is the breakthrough and the thing that we are so proud to present for you today. And at this point, I want to turn it over to Shari so she can continue this journey.
Great. Thank you so much, Julian.
My pleasure.
I don't have a Hamilton rendition on the back of that, but thank you. So after the investor selects the trade button and the initial time that they come in, they go through the subscriber agreement. But so after they hit the trade button, they're going to be directed to log into the Rialto Markets Alternative Trading System, or ATS. Now that the investor is in the Rialto ATS, they will be taken to the landing page where they can access their profile and key account details such as their account holdings and cash on hand, as well as recent issuers and securities of interest to the investor. Here, the investor selects City Zenith, the City Zenith security, which expands to provide the investor with information relevant to make the investment decision. There are 3 different sections. There's the overview, which we're in right now, which has a video, a management bios, as well as regulatory filings, which we're scrolling down right now, and links, and then media, different media clippings. We also, if we scroll back up, we can get to price information. So as we've heard in earlier panels, price discovery is absolutely critical. And the price information section provides an information on price history, as well as a liquidity score. If you scroll down a little bit more, there's the liquidity score, as well as history of different transactions that have taken place on the platform. And there are also some media clippings as well, and links to different articles. Yeah, if you continue scrolling. Now, the last tab that we've got is the research tab. So we had a panel on research. This is still an area that we're working on expanding. We understand that it's absolutely fundamental and it's still early days. For the moment, we have additional information right here on technical documents, but we are still continuing to expand this area, and we plan to supplement it with external research. So if the investor wants to purchase shares, they can purchase shares by clicking on an available order. You can see available orders over by the ticket that's available right there. So they can click on available order, which populates the order ticket. They can review the order. That pops up the confirmation. They hit confirm, and then it's displayed as a confirmation, which then brings them back to the landing page and displays that header at the top of their screen. It's important to note that Rialto provides access to banking rails for investors, and anyone purchasing shares will have pre-funded that purchase. So as you can see, if you hit the transaction exactly, funds were deposited in 4 different transactions, fiat transactions. So we provide all of the different banking rails. In the same way, if an investor wants to sell their holdings, Rialto will check with the transfer agent. If we go back exactly to that order ticket, there we go. If we go back to that order ticket, if an investor wants to sell their holdings, Rialto will check with the transfer agent to ensure the securities are freely tradable and unencumbered prior to allowing the sell order. Specifically in the case of KoreSummit, we connect with the core chain to confirm these details. To input a sell order, the investor fills in the order ticket with the number of shares and limit price, or the investor can interact with an existing sell order as is seen here. Now I'm going to hand it over to Karan to discuss the KoreSummit platform updates that occur post a share match. Karan?
Thanks, Sherry. Just when everyone's thinking the fun's all over and we're all done. Hey, wait a minute, okay? So you did the trade. I mean, the investors saw the trade happen and everybody's saying, oh, fantastic, it's done. No, hold on a second here, right? We actually come to the more exciting part now, because this is where the seller and the buyer, they want to see their holdings out on the cap table, and not in the cap table, but in their personal holdings, right? And I'm going to close a circle on this entire end story by discussing how the settlement of trades actually happens. Now, much of what I'll describe in the settlement process actually happens in the back end, so to speak, right? It doesn't have all this cool UI, because remember what this is? It's a settlement process that will happen on the blockchain, and it happens very quickly, right? But it's all in the back end. Before I get to that whole trade settlement process, and because all this happens in the context of what we call the infrastructure of trust, I'm going to first describe what I call the main trust points along the way. And so let me recap some of these things for you. After the investor submits the investment, a notification would go out to the investor about the compliance stage. And you saw how the investor can come in and they can review all that's happening in the compliance stage and when they've been approved, when things are moving forward, et cetera, et cetera. And you saw how the compliance officer does a KYC, ID, and AML check. Who are these compliance officers? They are FINRA registered broker dealers such as Rialto Markets, Vanderbilt Securities, WealthForge, Dalmore Group, Entoro Capital, and of course, Wield & Co. Only when the investor passes the KYC check, and only then, is the investor given a core chain ID. Now that's your trust point number 1, right? That's a very, very valuable thing, that whole core chain ID part. The investor is automatically invited to the investor's dashboard so they can monitor all this stuff so they know things are happening. When similarly on the trade side, when Rialto Markets performs a KYC ID and AML check on the counterparty, the other side of the trade, that is also a trust point. That same KYC report and verification transaction IDs are actually stored on the core chain. It's all immutably stored. It's all vetted out by the smart contracts that we have. So when Rialto completes a trade on their secondary market platform, as you heard Sherry describe, Rialto's system would issue a request to core chain. All this happens automatically, by the way, right? So Rialto's system issues a request to the core chain and says, please approve the transfer of the shares from the seller to the buyer. Well, does the core chain take that at face value? No. There are smart contracts that sit on the core chain and they examine the specific conditions required to successfully complete the core transfer. How does that happen? Here is an example. The new buyers, the counterparties, KYC, ID, AML check must be done successfully using a pre-approved KYC vendor and with a proper verification ID. Of course, Rialto being a FINRA registered broker dealer, and as all FINRA registered broker dealers, we'll make sure that it's being done in a very compliant way, but we need solid evidence that can be auditable and transparent out on the chain. Another example, of course, is, as Andrew mentioned, the blue sky laws, just to make sure that I know everyone is checking all these things and everyone's kind of watching with an eagle eye, but the smart contracts also provide this double layer of protection saying, hey, let's kind of make sure everything is, pretty clear. So that all those rules are kind of built in. So that's another trust point. Now, if all those conditions are met, the smart contract does 3 important things almost simultaneously. It sends a signal to the SEC registered transfer agent on record, the code transfer from CoreConnex, to deduct the shares from the seller and add the shares to the buyer and create a new user account for the new buyer. The new buyer also gets a welcome email to come and register on the CDZNS shareholder tool, where they can actually see all their holdings. That same exact entries, duplicates, are also with a consensus being formed automatically between all these smart contracts. Those get entered onto the core chain itself. And all of this is cryptographically locked. And it's all immutable. It's up out on the chain. It's all distributed on relevant channels on the core nodes, which we have in 23 countries, which now makes it pretty immutable. So both the shareholders, the seller and the buyer, can view their holdings. And again, all this cements the trust, the fact that all this is locked in blocks, it is immutable, it is sealed, and everyone can view, and they can query if they want and go through the audit trail. All that just enhances the trust factor in what we do. The store and dissemination of all this critical shared data and the trade settlement process, it's all powered by this, what we call the digital securities infrastructure of trust. And it's powered by the core chain, which of course is a permission blockchain. And as you just saw in the diagram, it's a bunch of core nodes in 23 different countries. And of course, Rialto Markets also is part of the core chain with a core node. The core chain is able to process up to 318 such transactions per second, and that without scaling yet. And that means over 10 billion, with a B as in a boy, 10 billion transactions per year. Now, obviously, it is highly scalable. As you can see, this entire end-to-end process, from the primary raise to the trading to the settlement on the company's cap table, it's all fully integrated, it's fluid, it's efficient, it's trustworthy. And now you may say, well, where does the fluidity come in and where does blockchain play this role? Let me give you an example. Today, and much of the past, if you do a buy-sell transaction in private securities, it takes at least 2 to 3 weeks. I kid you not, 2 to 3 weeks to even get something settled, right? You have to find a party and you have to go through all this. And why is that? Well, because all the data, all the transactions, all the verification, all this needs to be done manually, verified and cross-verified and cross-tabulated manually. And the same thing with all the securities compliance, regulation. I mean, everything is done manually, right? But on this digital securities infrastructure of trust, there are 3 things that did not exist before. All data resides on the core chain. It can only be put there by trusted, registered, and regulated entities. That's the key, such as our FINRA registered broker dealers. All data has been cross-checked for compliance by untamperable smart contracts. Third, all data is immutable on the chain. Once it's there, and it's a permission chain. So what happens is that this cuts down on the trade cycle time dramatically to hours and even down to seconds for established accounts. And then, of course, depending on the liquidity and the volume. As David Weil, the father of the Jobs Act, said in the initial stages, in the keynotes, the blockchain-based digital securities infrastructure of trust removes the constipation from the trading process, right? I thought that was a good, interesting picture to keep in mind, and it removes the constipation. Thank you for that. Now, in the past, right? I mean, even until even now, blockchain is usually compared to it's either a fancy tool for scam artists, like in the cryptocurrency world, or it's just a fancy backend database like an Excel, on steroids. Well, that may be true of most public blockchains, but the core chain, it's a permission blockchain, is a living, breathing, intelligent infrastructure that keeps the bad guys out and solves a problem of fluidity and efficiency in secondary markets for private security, even for the $10 trades. And that's where the fluidity of efficiency really comes into play, right? Now, that's what I call the real deal. So in this specific round trip of the trade cycle, as you saw, all the parties to this transaction, the investor, the CrowdCheck report team, the FINRA registered broker dealer, the licensed secondary market platform, the parties to the trade, the buyer and the seller, Citizen as the issuer company, the transfer agent, everyone is on the exact same page, right? In fact, they have all been on the same page throughout the process. Now, how cool is that? Right, Sherry?
Absolutely. And I think it's important to note that, we've talked a lot, a common thread throughout today is, this conversation around digital asset securities and digital assets. And I think it's important to note for everyone that's on the call that a lot of issuers that we work with don't even realize that the hyperledger's in the background. And that's really, we're happy with that. We've always approached this as, the technology is a tool to enable something. We don't really enable it as, the fireworks, but it's a tool to really enable something else, which is exactly what Karan was talking about, really enabling everyone else to be on the same page and for this infrastructure of the private markets to really be built that hasn't been there before. So, but just, I really encourage people to not, have this angst about digital asset securities. Do I have to go learn about cryptocurrency or go learn about blockchain? We really, this should be, I don't know anything about my iPhone. I really don't. When it starts acting up, I turn it off and I turn it back on. So when you hear about the hyperledger, don't worry about anything else than that, right? You should worry about running your company and be really good at that. That's all I'll say. And I'm sure at the fireside chat, we'll get to more around that. So let me get back to closing this out and some of the questions. So today we walked through the entire life cycle from issuance to monetization of a company's shares. And, we really do feel that this capability is necessary to be able to scale the private markets and importantly allow retail participation in private companies. For companies, though, placement on Rialto's ATS enhances their capital toolkit by giving them an off-ramp to offer investors, and also relieving them of their corporate liquidity event constraints. So, feel free to reach out to us at support@rialtomarkets.com or julian@coreconnects.com if you want to learn more or have any questions for us. And obviously Sarah at CrowdTech or, if you have any questions for her. So now the fun continues with a fireside chat. We're going to take some of the questions that you sent in before the conference. We're also going to take some of the questions you sent in during the conference. And we will take as many as we can in the time remaining. And if we don't get to you, we will try and get to you post this conference. Okay, so rapid fire questioning. Who's feeling lucky? I am going to
give it to Sarah. Give it to Sarah.
Exactly. Okay, I will start with Sarah then. Okay, Sarah, where can we go to learn more about the limits for trading securities through Reg CF and Reg A?
Well, we've got a very useful summary of all of the various exemptions on our website. I am going to have to check to make sure our intern actually updated it. I know that Oscar has an updated version of it, but that summarizes the restrictions. But really, it's very simple with respect to are there limits? Pretty much for a non-affiliate, assuming you are not an officer or a director or 10% shareholder of a company, you can trade Reg D securities after you've held them for a year without doing anything more. But you do want to make sure that the transfer agent knows that the year has expired. So it's very important to have a really good transfer agent who's keeping track. Same thing with Reg CF. Again, no restrictions once that year is up. And with respect to Reg A, no restrictions. Those are free trading securities from the day they're issued. But go to our website as well. There's some useful information under the resources section.
And I would just like to second the fact that just in general, CrowdCheck's website has a lot of really helpful information. So, if you're looking in general at anything across a lot of different topics around raising, and there's just a lot of really useful information on their website.
Thanks.
Okay. Actually, let me go to Karan in the interest of the blockchain and technical section. What blockchain are you using? If you want to talk about that, and then why don't we do a couple of these and then move on.
Sure. Oh, absolutely. So the core chain is built on what we call the bare metal Hyperledger fabric. It's an open source, but natively it's a permissioned blockchain by the Hyperledger Foundation. And the core chain adds a stronger layer of verification and private capital market smart contracts. We call them core contracts, and they handle all and any type of financial instruments and general agreements and contracts too. So it is the bare metal Hyperledger fabric, which is highly supported. It's one of the premier, most advanced permission blockchain for enterprise level. And then we add a much more infrastructure on top of that.
Okay, great. Should I continue with some technical questions, or should I do like a technical section, guys? Consensus?
Just one thing, I'll just bring it in. Sarah, I found your document. We have updated it. So for anybody that wants it, you can email Sarah or us, and we will email it to you. Thanks. That gives you the breakdown. She created it.
Excellent. So I'm going to continue on a technical section, so we can just stay focused. What type of data is being stored on the core chain?
Well, all the data that actually relates to a couple of things. Number one, the verifiability of participants. So in other words, every company, every regulatory body, every investor, every shareholder that have their KYC done, they're all verifiable parties. So that information is stored in the core chain. That's number one. The second is all the validity of all these transactions that kind of go back and forth. I mean, all the trades that happen and, many other types of transactions. So any data that relates to that, along with the date timestamps and who has authorized which portion of those transactions is kept on it. So, and all these are basically the ledger records for traceability and auditability.
Great. And how do you ensure the data is secure on the blockchain? Because everyone can see all the data on the chain.
That's a great question. So on the core chain, not everyone can see all the data, and only the parties who are direct parties to the trade, like the buyer and the seller, and those with fiduciary responsibility for the trade would have their data available. Now, of course, the buyer and the seller will be looking at the platforms, CoreConnect's platform or Rialto platform. I should say the shareholder tool of Citizenit and the issuer companies, right? That's where they would see all that. They don't directly have to interact with the blockchain itself. But all this data is stored. It's totally encrypted. It's sealed and locked with various levels of protection using rights and authentication. So Hyperledger Fabric provides one level of security and authentication, and on top of that, we add many other layers, and then of course the data is encrypted. So going through all of that, makes it pretty secure.
Excellent. I've got 4 more questions. And so, and they're getting a little technical. So if anyone's head's starting to explode, maybe go get a cup of coffee, because I don't want any issuers to start getting their head to explode. So do we need a wallet, and who pays gas fees?
It's a great question. And I don't know if, some of you have heard David Weil mention this. You actually don't need a crypto wallet, right? The premise of all this is that the shares and securities are, they're stored very, very securely. They're not bearable instruments, right? So you cannot have a wallet and, say it's mine. And if you lose your wallet and lose your private key, you're done. It's gone. Just it happened in the Bitcoin and, many of the crypto spaces, right? Cannot happen here. No one can steal your wallet. And there's absolutely no way you will lose them. How will you possibly lose it? You forgot your password and log into the platforms. fine, you re-verify who you are and you get your password, right? It's pretty straightforward. The premise of much of the public blockchains has been who is authenticating all this, right? Here, the authenticators are the regulated parties, the broker dealers and the ATS, folks, the transfer agent. I mean, these are the authenticators. So they have a vested interest in making sure that all this is absolutely correct. And there are no gas fees. No one pays any gas fees, right? And we don't, for example, we don't go to a farmer in New Zealand and say, hey, can you validate a transaction between somebody in Ohio selling their shares to somebody in Germany? What do they know about, cross-border, transactions? So it doesn't make any sense. So the core chain is designed to perform full business level validation, which means that the parties who do these validations have to be knowledgeable people, and they know what the smart contracts are doing and how the securities laws work, et cetera, et cetera. So, there's absolutely no gas fees and no such expenses for anybody on the chain.
Perfect. So does the company need blockchain developers?
Absolutely. This is the good news. Absolutely not. In fact, I'll go even one better. They don't even need to know how to spell blockchain.
Yay. Excellent. Excellent. Okay. Okay. So is there any fear of, some of these, coins that have been coming up? I think it's kind of the same question that you just went through. People have been hearing about some of these coins that have come out, and a lot of volume, and it impacts other blockchains, and people get nervous. There's no possibility that would impact the core chain.
So
is that a correct statement or not a correct statement?
It is generally a very correct statement. I'll break it down into two different parts. Number one is that, is it preventable? That is something we never know, right? I mean, these are individual traders who may decide to do whatever they want to do, but can they hide behind a manipulation like that, right? And in the crypto space, in the public blockchain space, even though they call it a public blockchain, it's all very private, right? Nobody knows who's doing what. And it's the same two parties, just moving monies back and forth all the time, just creating all this fake volume. And no one knows, who these actual people are and where this is coming from, right? I mean, they have all these pools taking individual, contracts, and then, they're dispersing it all different ways, and they're masking all this stuff, right? So you never know exactly what's happening. On the core chain, that kind of situation is almost next to impossible, only because all the parties are verified parties. And for those who need to know if there's any question of manipulation, they can go in, not they, but the regulated authorities and the broker dealers and securities attorneys, and they can perform an audit and say, who are all these different people? So there's a lot of transparency. It's very ironical, in the so-called public markets, many such things are very private. You can never tell, right? But in the private markets, some of these things are very transparent. It's almost like the opposite. So it's pretty ironic. So can we prevent it? Generally speaking, yes. But more importantly, if it ever happens, it's easily detectable. It's pretty transparent. I hope that helps.
Okay, so that concludes the technical questions for the day. So hopefully those who had any questions on the blockchain and the technical infrastructure, those questions were answered. Secondary market, Joel, hot seat. If you are selling digital securities through Reg CF or Reg A on a secondary market, are you allowed to use only one market to sell the securities? For example, are we only able to use Rialto, or can we sell through another available ATS?
You can have your shares listed on multiple marketplaces. The question that an issuer needs to ask himself is it worth it? Considering that we have some discussions about liquidity and the challenges of getting that liquidity, if you're in two different places, you've now increased the challenge. Second, the placement of those securities on a given ATS has fees. And therefore you're in essence doubling or whatever increase there is in having an extra fee on top of that. So from a practical perspective, it might not make sense to do so, but it is available. And I would also venture a guess that says once this market takes off in X amount of years and there's dual listings or trading like that, that it would be something maybe people would do as things grow.
Got it. Does Rialto Markets work with other broker dealers, and how?
Does Rialto work with other broker dealers? Yes, in numerous ways, and everything from the primary issuance part to the secondary trading part. We'll work with broker dealers as they're bringing companies out or going to try to raise capital for them. We'll work with them from a system perspective. We are a broker of record, so we can be the broker on that side and work alongside other brokers in the capital raise. Brokers that want to join the system. One of the things that is unique about Rialto's ATS is that it is directly available to all. That means no matter whether you're a broker dealer or a retail investor or an institutional investor, accredited, non-accredited, everyone has direct access to the Rialto ATS. So we'll work with broker dealers in that capacity as well. Numerous ways. Happy to work with any broker dealer that might come our way.
Excellent. So when an issuer comes to Rialto, I know I'm context shifting, I'm just trying to take the questions as they came in. When an issuer comes to Rialto and gets set up on the Rialto ATS, does the company get sort of an ATS identifier, or how does that work?
So we at Rialto anyway, we look at this, we all come from traditional capital markets. We don't feel that you should rip out all the old and just do something new, but rather take the best of features of both. And so we try to merge Rialto's a Rialto bridge. We try to bridge some of the old things that happen and some of the new things to get the best of both worlds. As such, we think that QSIPs, tickers, all make things easier for investors and issuers as well. And so we will get a ticker, we will go and get a QSIP so that everything can be tracked all along and people can know exactly what they're trading in. So simple answer is yes, you will get that, an identifier as an issuer.
Great. So what are the fees for the ATS if the company is using the full Reg ATS plus product with Core Connects besides the $4,500 a month?
So from an issuer's perspective, we all work together. Everyone on this call is working together to make it easier for you. And so if it's all incorporated into the fees that KCX is charging, and they incorporate our fees, and that's the fees for the issuer. We have other fees that go to the investors, subscribers, we call them, onto the system that are trading fees, but those don't have anything to do with the issuance.
Understood. Do you provide market making?
So firstly, we, Rialto, do not provide any market making. We don't get involved in the trades at all. We do not buy or sell securities. We just create the systems and develop the systems and deliver the systems that empower others to do the same. We work with liquidity providers. We specifically refer to them as liquidity providers rather than market makers, because market makers have certain connotations to them that wouldn't really be applicable in the markets that we're dealing in, like the private markets, Reg A, Reg CF, et cetera. But we do work with liquidity providers. As mentioned in one of the sessions earlier, and Shari mentioned again in the previous one, we're working with gathering all the component parts necessary to supply the price discovery and research that would be required for an investor. That includes liquidity provision. The liquidity provision or liquidity providers will do so based on the security, based on various factors within the security, they do have to do the analysis themselves to figure out what kind of liquidity provision they're going to deal with. But we do work specifically with liquidity providers that are willing to have those discussions based on this particular issuance.
Excellent. This is kind of fun. It's kind of like you're in the hot seat.
Fun for you. You're asking the questions.
I know. Okay, let's see what we've got next. Are trades always available for the investor? Can they sell anytime? What's this process like? I mean, hopefully they've kind of seen what the process is like, but if you can.
Yeah, can you trade that? I'm going to be pedantic about that and say that can you trade anytime actually is two parts to that question. Is the market available and can I trade are two different questions.
Yep.
Availability, yes, you can come in and the market's going to be available whenever you need it. Whether there's going to be the other side to that trade, whether that's a market maker, liquidity provider as we call them, or other, is indeterminate. That will be dependent upon the security and the time of day perhaps as well. But the system will be available. Whether or not that is tradable or not will be determined by market forces.
Excellent. Hot new question coming in off the press. I did a Reg A with a different broker dealer and transfer agent. What is the process in moving to Rialto and CoreConnex for secondary trading?
So actually, I'm gonna partly ask that, and then I'm gonna flip the hot seat. I'm gonna pass that hot potato over to Sarah. As far as we're concerned, what I believe the question was referring to is if I'm dealing with a different broker dealer and I just want to use Rialto for the secondary market, please have them contact us. We'll deal with that. What the regulatory requirements are for notifying the proper authorities of what you're doing, Sarah, on to you.
Well, hopefully in the Reg A, the company probably would have said something along the lines of, we may seek a secondary trading forum. There can be no assurance that such will exist, because that's the usual thing to say. But there's, unless you absolutely promise that you would seek secondary liquidity on OTC as opposed to on Rialto, it should be no problems. I mean, even if you were silent about it, providing that what you're doing now is not in contravention of what you specifically said in your offering circular. And then the question about transfer agents, that's something I think technically you would talk to CoreConnex about if you wanted to shift. But I would go back to some of the things I said this morning, which is before you do any of that, make sure that these securities, make sure there's no right of first refusal, make sure there's no transfer restrictions, make sure that the trading is not going to get you into trouble with 12G. Do the sums first and then start taking the regulatory steps.
Very smart. Get the shoe boxes out or something like that. Hopefully there's not shoe boxes, but there might be. Okay, excellent. Joel, just a little hotter for a little longer. I just have two questions left. I'm sorry, but it was a whole day on secondary markets. So,
sure.
Okay, how does the ATS regulation process change when buying, selling tokens? You know how I feel about tokens, but okay. When buying, selling tokens tied to real tangible property versus a purely digital security. Does this change if selling securities via Reg A, Reg CF?
Again, Sarah might want to pipe in on this, but from Rialto's perspective, if it's a security, then we can trade it. It's that simple. If it's real assets and it's identified as a security, then it's tradable on the Rialto ATS. If it's not identified as a security, and I'll just give an example. NTFs are not I don't know what they're classified as, to be honest with you. But if they were not to be classified as securities, then Rialto would not trade them. If they were to be classified as securities, Rialto would be able to trade them. That's really the simple answer. There's no, when it comes to Reg A or Reg CF, both of them are available equally within their own framework. Obviously, there are different restrictions on Reg CF versus Reg A, both in timeframes available and others. The first session took you through a lot of that. But as far as the ability to trade them on Rialto, they're both available for trading as long as it is a security.
Excellent. And last question. What makes Rialto ATS different than other ATSs?
Well, firstly, the people. No, but in all seriousness, what we do is we offer direct access to the widest variety of potential investors. We look at things from the totality of the ATS, meaning it's got to have its connections into all other component parts of the entire infrastructure of trading. So that would include the connections with the transfer agents, with the banks, with escrow agents, with whoever is necessary in order to make sure that there's a very smooth operation from the moment that someone says, clicks that trade now button. And it is direct for everybody. So you don't have to go through a broker if you're a retail investor. You can come directly to us. You'll be interacting with the most diverse type of investor base. And we all come from, Shari had mentioned it earlier in her session, we all come from Instinet. And one of the things that we're well aware of is the idea of building networks. And the marketplace is littered with failed attempts at building networks. One of the key components to building a network is making sure there is a diverse community. If everyone is a buy-side asset manager, odds are everyone's going to be on the same side of that trade. And you're not going to have the sellers, you're going to have the buyers. When you have the diversity of the community directly accessing the ATS itself, having the ability to see all the different securities that are available and each one getting involved accordingly, providing research on that ATS through the ATS so that you can understand price discovery. All those component parts make for a smoother experience for any subscriber on the system. Sorry about the sales pitch.
No, excellent. I just got a couple more in. I'm actually going to give them to Sarah. But
thank you. Good.
I'm going to give them to Sarah, but we'll see. They're similar. I'm going to just say both of them, and then you can give your answers. My lawyer told me that if I just created an internet, I don't need to adhere to Blue Sky or Securities Manual. Is this correct? That's question one. Question two, close corollary. What can happen to a company who is not filing for Blue Sky or Securities Manual and their shareholders or selling their securities over the internet or some sort of public venue that is not an ATS?
Okay, so I'll do the second one first. I mean, if the company didn't set up, if the shareholders are just doing this on their own, and it's just me saying, hey, Shari, I've got some shares in Citi Zenith, do you want to buy them? Then it's kind of on us, it's on me, in theory, to check the laws of Virginia where I live. And also, I don't know what state Shari's in, but I would need to check both of those in theory, and make sure that I could make that sale. In reality, nobody's going to come after me for doing a one-off because nearly every state has an isolated transactions exemption. And so sort of individual trades of that kind, rogue trades, probably not going to get anybody into trouble, and certainly not going to get the issuer into trouble. If the issuer sets up a system like a bulletin board, which is fairly common, a sort of passive bulletin board where somebody can say, I have shares, if anybody wants them to get in touch with me, then here's my contact detail, and the issuer doesn't intermediate that in any way, that's also probably okay. You know, again, you're getting sort of closer to the point where there might be a regulatory interest by the SEC. Now I'm going to flip back. The first question, I didn't quite follow the question. My lawyer told me if I just use the internet, I didn't get that.
My lawyer told me that if I just created an internet site, I don't need to adhere to a blue sky or securities manual.
Okay, then I think that's actually what I was just talking about, this sort of internet site where, you know, a bulletin board where people can introduce that, can meet each other. Somebody is still going to be required to comply with blue sky laws. Every transaction, to go back to what I said earlier, every transaction, exempt, registered or illegal, and maybe the sort of transaction I just described with Sherry, maybe those would fit into the exempt because they could be isolated, or it could just be that, you know, the company is Reg A. So it's going to be a huge it depends, and to use the SEC's favorite phrase, facts and circumstances. It will depend on the facts and circumstances. But if you set up some sort of bulletin board, especially on your lawyer's advice, you're probably okay.
Okay, that's great. I did a Reg CF and I forgot to file my annuals with the SEC. Can I list on an ATS? Let's come.
Not yet. Go back and fix it. This is the great thing about Reg CF. It's very lenient, but you're currently in violation. So fix the violation before you do any kind of trading.
Great. Okay, Sarah, over to you. Primary market questions. So now we're going to do a little primary market questions. I'm actually going to start with something that I think a lot of people, you know, will be helpful. I really liked this question. What question should I ask of service providers as I vet them? I would. Issuers go out and, you know, they probably don't even know what they don't know.
Yeah, I think that's a huge problem in this market. I mean, this is a very new market, and we are in the newest part of the new market. So we are absolutely in uncharted waters here. And so the first question is always going to be, have you done this before? Now, in some cases, it's going to be nobody's done this before, which is actually one of the most interesting places to be, is when you're creating new things. But to the extent that you're dealing with this you know, sort of thing, you do not want, you know, your brother-in-law who is the really good corporate lawyer or, you know, immigration lawyer. I've seen that. You need somebody who's done these things before, whether it's the brokers, whether it's the lawyers, whether it's the marketers, whether it's the transfer agents. You need somebody who at least knows what the questions are. So have you done it before? If anybody has done it before.
That's great. How quickly can I
just jump in on that?
Please.
I just want to jump on that because it's a question that comes up very often that we get from issuers that is not related really to us. And we tell them very often, getting a good lawyer does not mean you've gotten a good Reg A lawyer. And they can be a really, really excellent firm attorney, what have you. Reg A has some really interesting nuances. It's very important to get someone, a lawyer particularly, who understands the Reg A world.
It's very specific.
Yeah.
Yeah. Excellent. How quickly can I launch?
Is
Sarah,
that launch on the secondary market or the primary?
Primary, and it's probably, let's go Reg A. How quickly can I launch do Reg A and do Reg CF?
Okay, both of them are going to be always driven by the availability of financial statements. It's the single thing that takes the longest and we hang around waiting. So I usually say starting from the document dump, when you give all your lawyers all of the documents they need, 4 months is a reasonable space for a Reg A, but it does start at the point when you have audited financials or something close, because the auditors, the lawyers don't know the right questions to ask until they have those financials. Reg CF, 4 or 5 weeks. But again, starting from the point of having the financial statements. And then D is always, well, you know, you can probably do a D on the back of an envelope if you like, and that's, you know, that's your risk tolerance.
That's great. And for a Reg CF, when you say financials, do those need to be audited, reviewed? What's the level of?
Yeah, it's the sub 107,000, which we never deal with because it's just not practical. You can just have self-certified financials, but they do have to be prepared in accordance with US GAAP. Between that and 535,000 reviewed financial statements, between 535K and 1.07 million, for first-time users of Reg A, you could have reviewed financials only. And then over 1.07 million to 5 million must be audited.
Excellent. What is the regulation around my own marketing efforts?
How much time do you have? Here, I'm just going to say, go over, look at the CrowdCheck website, because the communications rules, there are different rules for 506C, Reg D, Reg A, and Reg CF. They all differ in confusing and counterintuitive ways. I spend a lot of time with my clients going, you cannot possibly be serious. You must be making this stuff up, because the rules change between testing the waters and live offerings. They change in Reg A between when you're qualified and post-qualification, because you can do skywriting before that, but you can only do clickable links, or, you know, online after that. And the content is, you know, regulated in CF, much less regulated in A. So that's a huge, it depends.
Great, excellent. So Joel, I guess, when can I get my money?
I assume that's coming from an issuer.
Coming from
the investor when the security you have went up. That's when you get your money. From the issuer, when can you get your money? So really, there's it depends. There are generally, if I'm not mistaken, I think Sarah and I had this conversation earlier in the week. There is a minimum that you need to state, but that minimum can be very low. So practically speaking, you can get your money immediately. As it comes in, it can be distributed to the issuer. And Sarah, please correct me if I'm incorrect on that.
Yeah, and again, this is one of the areas where it depends on whether it's Reg CF, Reg A. Reg CF always requires that your offering be open 21 days. So even if you hit the minimum on day one, you'd still have to wait. Reg A, as you say, you can take, if you don't set a minimum, most people do, but if you didn't, you could take $1, providing your disclosure has said we can take $1.
Excellent. And Julian, is there a tool to help me manage thousands and thousands of shareholders for reporting to them and if for voting purposes?
Yeah, I wonder. Well, that would be our CoreConnect's all-in-one solution. I mean, that handles not only all your investor shareholder requirements in terms of the cap table management and shareholder management functionality, but also we have built in some wonderful features such as the voting capability to capture e-voting online. So if you're hosting perhaps an annual general meeting, then that live voting resolution that you'd be asking your shareholders could be captured in real time.
That's great. It is 5:26, 5:27. So I think we have covered most of the questions. I just want to say there was, I just want to thank Oscar and the Core Connects team for pulling all of this together. I thought it was incredibly informative. I also want to thank everyone that came and attended. I know everyone's time is really, really valuable. So thanks for putting in the time to come and learn more about private market securities and secondary trading. If there was a question that we didn't answer, I know there were a lot of questions flying in. I was trying to take them on the fly. If there was a question we didn't answer, please reach out. Oscar, over to you.
Great, thank you, Sarah, Sherry. Joel, you were the star today. I mean, we're definitely getting a lot of stars on you and Sarah, so it's good. No, listen, it was fantastic show by everyone. It's just goes to show, just as we said in the beginning, a new door, a new chapter is opening. Sarah's probably excited because so many people are going to contact her and say, I want to do this business, because that's really what this is going to emerge. We're starting a new business model. A new business model, people are going to be focused on this side, and it's just going to make the primer even better and better and better. The beginning of 2021, the ecosystem in Reg A is the year of leveling up. What does that mean? We're improving everything. Everything is about what you did last year. It doesn't necessarily mean that it's going to work this year. And more importantly, you have to do it better, because as you all indicated, people are asking questions. Have you done it? What's your success? You know, they demand that information. They're looking not only for the relationships, but the costs associated with how you do things. And so really excited about today. It's a great way to finish it. For those who didn't get all your questions, we do apologize. We try to grade them all together, but if you email us, we will get you the answers. The entire event was recorded. Yes, it will be available shortly, within minutes, on YouTube, and it will be on the Core Connects website, KoreSummit website. We will release it to everyone so you could watch it at the leisure of your home. Thank you once again. We hope to see you at the next KoreSummit. And just leaking out the title, a little bit of the collectibles. That's our favorite. The new bet. Thank you, everyone. Till next time. Cheers.
Great night.
Cheers.